It's a research institution based at University of Rwanda, Gikondo campus. Thank you very much.
Thank you very much. Good morning. My name is Herman Musahara. I'm a senior research associate with the EPRN and formerly with the University of Rwanda School of Economics.
Good morning, everyone. By names, I'm called Sheila Ndejeya, and I'm the National Director for Special Olympics Rwanda. We engage children and adults with intellectual disabilities in sports, but also other fields that engage them.
Good morning. My name is Ines Musabye Maria. I come from Heroes Day Care Center for Children with Disabilities based in Kichukiro, and I'm Executive Secretary of the organization which founded that center. Thank you.
Good morning. My name is Frodo Anambajimana. I'm heading the digital finance in AB Bank.
Good morning, everyone. My name is Dr. Gamariel Mbonimana. I'm Director of Research, Consultants and Innovation at East African University, Rwanda. Thank you.
Good morning. My name is Muvini Mohammed. I'm from Grow Health Limited. I'm the CEO.
Good morning. My name is Jeanne Sabimana. I'm from Love with Actions, and the entities support children with disabilities. I'm program manager on Darisen. Thank you so much.
Good morning. My name is Zabana Bezaris. I'm a legal representative for NGO 3 Rwanda Police, working for resilience of youth infected and affected by HIV. Thank you.
Good morning. My name is Innocent Vazaramnya from RIM Limited Microfinance. I'm in charge of marketing and the products development officer. Thank you.
Good morning. My name is Agnes Mutuimana, a PhD student at the University of Rwanda and also EPRN member. Thank you.
Good morning. My name is Noel Patrick. I'm a head of SME and trade financing in Bank of Africa, Rwanda.
Good morning, everyone. I'm by names of Patrick Aishachi. I'm Deputy Executive Director at CVA Rwanda, Citizen Voice and Actions. We are youth-led organization. As a local NGO, we empower young people to become active citizens. Thank you.
Good morning, everyone. I'm Jean-Baptiste Nkundimana. I work for Plan International Rwanda, a child rights-based organization. I'm the monitoring, evaluation, research, and learning. Thank you.
Good morning. My name is Nadine Rutabairu. I'm the Women Banking Manager in Equity Bank Rwanda.
Good morning. Good morning, everyone. My name is Alice Manilafasha. I'm working as admin at Onoma Hotel.
Good morning. I'm Safari Deo. I work from Onoma Hotel as a cost controller.
Good morning. My name is Songa Chris. I'm from the National Bank of Rwanda, from the Financial Sector Development and Inclusion Department. So I'm glad to be here to hear about these research papers because they speak into what we do at the department and specifically. So yeah, I'm in charge of digital financial services, more specifically in fintech and digital payments. Thank
you. Good morning. My name is Griserini Ibizi. I come from K International in Rwanda, where I work as financial inclusion technical advisor.
Good morning, everyone. My name is Vestina Mcheshimana. I'm the country director for Water Aid Rwanda. Happy to join this forum.
Morning, everyone. My name is Victoire Mtuimana, EPRN member, but I'm self-employed, helping small businesses in financial analysis. Thank you.
Morning, everyone. My name is UK Gamba. I'm in charge of strategy and business support with NCBA Bank. Thank you.
Good morning. I'm Karisa Felicite. I'm a chairperson of Disability Inclusion Rwanda, an NGO that works in a Gasabo district. It works with people with mental disability.
Good morning. I'm Antoine Desabien, independent consultant and the EPRN member. Thank you.
Good morning. My name is Julien Mafutala, DAF of Sagaganza Microfinance.
Good morning. My name is Rosemary Bota. I'm one of the presenters. I work with One Acre Fund here in Rwanda, but I'm also a researcher.
Good morning. My name is Mpaso George Ntukuro. I'm a researcher with One Acre Fund.
Introducing them.
Financial sector analyst. Thank you.
Thank you very much. Let us welcome Professor Msahara Haman to give us welcome remarks on behalf of the President of EPRN. Thank you. Prof.
Thank you very much. For those who joined later, my name is Herman Musahara, and I'm here for introducing and welcoming you officially. The chairman of the board of EPRN, Dr. Chazi Ruranga, is indisposed. He's not sick, but he's engaged in other activities. So I have accepted to occupy this space this time so that we introduce and welcome you to this session. First, as a senior member research of EPRN, but also as a senior member, I was very, very impressed by how useful the participants we have today are, and also the EPRN membership. So I think all protocols observed. I would like to I think there will be a slot for the African Economic Research Consortium. And I think when the guest of honor is here, there will be due introduction. But my task is very simple. It is just to introduce and to have this opened. It gives me big pleasure and honor to be with you on this important occasion of a dissemination session. One of those that is becoming a flagship activity of EPRN, Economic Policy Research Network. And I think this is really the opportunity to see how unique and how important these networks are in the professional terms, that is researching and disseminating. You are aware that EPRN is now becoming, in Kinyarwanda, they call it Ubukombe, with more than 1,600 members. But I think the big thing is not the number of members, the products and the impact the network will be having onto the policy making landscape of Rwanda, East Africa, and Africa. So number one, I would like to recognize the work that EPRN is doing. Number two, I think it is thanking but also recognizing the great work that African Economic Research Consortium has been doing. Most of you are young. By the time when ERC was being established, I was a master's student at the University of Dar es Salaam, master's in economics. Those who know the late Ndulu, Benno, and others were my teachers. So it has been around, and I think it's not a question of the number of years, but it's one, you can say in Africa, it's one of those think tanks with really authority, versatile, capable of overseeing serious research, and that EPRN has associated with ERC, African Economic Research Consortium. Now it is easy, you can visit, and they have many products, and a lot of our last time when that was 2008 or 10, I was a dean of economics in Butare, and there was a very prestigious collaborative masters. There was also this interlinkage working with other universities, and I think, well, I don't have words to say how ERC in this domain is really authority in Africa and globally. Now that ERC supported EPRN, I think is something very important, and this to me makes even this event even more memorable. Number three, as a way of introduction, I'll not go into the content. I think this will come as the taste of the pudding will come in the eating. But I wanted to say that dissemination has become very important in these stages of research work. When I was young, and I remember I got my first grant from IDRC in 1983, dissemination was not all that important. I think the big issue was really going into the business, doing the research, reporting very well and on time. But in the last 10, 15 years, if you don't disseminate, your research doesn't become of any value. We used to say publish or perish. Now, if you don't disseminate research findings, it's as good as throwing it or putting it on the shelf. And I think it is a process, because it is not a question of this meeting only, but also what comes after that. After that, you have policy briefs, and I think a smart researcher has also collected a lot of inputs from such a session. You had maybe inputs from the sponsor, inputs from peer reviewers, your colleagues, but also you will definitely collect a lot of information here. And you can imagine with the diversity, I was listening very carefully, of the organizations that are here. I think if the researchers who did this work, if they are keen, they will be keen. I think you can harvest a lot of inputs for your final products, which is very important, because the usefulness, I mean, we always ask people how original, what are you contributing? Now, we normally have that pain. I mean, we go at pains to see what will be the use of the product of that. That's why sometimes there may be need for summarizing, so that those bureaucrats, policymakers who have no time, who can only manage to read for 30 minutes, so that they can see what has been done. So it has, this process of dissemination is important for that work. Another point I wanted to use as a way of introduction is to underline how important the content of what you are going to talk about the whole of today and what the researchers did is very important. Financial inclusion. Financial inclusion, I heard someone is in fintech and other things. These are really trending, but I think it is very important. And that's why I think this is an area that is being done, because not only for sustainable development, but also for economic growth, for, the economy has to, in order to grow, I heard people from Equity Bank. I used to be a member of the board of Equity, and one big thing is challenging the issue of, addressing the issue of the unbanked, and this has made Equity Bank one of the, now globally, the brand of Equity is global, but in Africa, I think in terms of technology, and I think this is very relevant here. But the Equity Bank started by addressing issues of financial inclusion. As an example, I'm not advertising. There are other banks that are trying to do it, because like introduction of agency and even, other banks have been doing. But it's very crucial that we financial inclusion become one of the, it is one of the most important drivers of economic development. Now, related to this is again the good news of digitalization. I think as a way of introduction and opening this meeting, I would like to request those who have not developed interest in this digitalization business to do that. You don't have to start from the, but with the last time I was here, and I remember that question was asked me, with the onset of AI, But I think in Rwanda it is also quite now well known that technology, IT is becoming very important. Now when you have digitalization, then financial inclusion will become very important. Another thing that is very important for you to underline, for those who are listening and who will be chipping in or contributing, inclusion is important. It is loaded. In sustainable development, we say, don't leave anyone behind. But having specifically the ARC and EPRN to say we address this digital financial inclusion, but particularly focusing on groups like people with a disability is really original. It is something that is important. It will be a contribution, knowing what is happening in Rwanda, and I hope you will. I'm sorry, I will be leaving a little bit early because of other obligations for EPRN that I was assigned, some international training. But I think here, if there will be substantial harvest about, because if it will be a contribution, knowing that, inclusion, but also going to the extent of having specific data and information. And I know with the ARC, these must be very rigorous, I'm aware, very rigorous research process. It's not, how do we call it? Blah, blah, blah. That is well known. I think we may have very original something on people living with disability and other marginalized groups. Is very, very important for development, sustainable development. Finally, and I think Rwanda has been keen in rapid development, in building sustainable development, and now it's almost known everywhere as something that, as a country that really wants development that includes everyone. And now that you are aware of these strategic and envisioning processes, you are having a national strategy of transformation #1. I hope there will be #2, and also the vision 2050 is the role. I think most likely the findings of this taken many minutes, but I wanted to repeat again that to me this is very, very important. You may come to realize it later, but this meeting, I just came to fill in the gap for Rulanga, but I'm using this microphone to say that I really would like to ask you to develop interest in what is happening either here and later, and especially for a country like Rwanda. And I guess if it is ARC and EPRN, there must be other case studies in other countries which you may follow and see what is happening. Yeah, with that, really, I thank you for lending me your ears, and ask Seti to take over, and if you wanted the words, let this be open for today. Thank you.
Thank you very much, Professor. Thank you very much for opening our session. I don't want to repeat what he mentioned, but as he said, EPRN is happy now partnering with the IRC in this work of research, and we are much grateful because IRC actually supported EPRN technically and financially to have these papers available. Thank you very much, Prof. So let me welcome CNV Mainstream who wants to give remarks on behalf of the IRC. Please come forward.
Thank you, Seth, for organizing this important workshop today, and thank you, Professor Musahara, for your opening remarks and also for your positive words on AERC. So, all protocol observed, ladies and gentlemen. Again, for those who don't know me, my name is Senvi Maestri. I'm in charge of communications and policy outreach at AERC at our headquarters in Nairobi, Kenya. And it's a real pleasure to be with you here today in Kigali. Let me just give you a quick overview of what AERC does and how it's relevant to the work we're doing today, and to give you a bit of context. So when AERC began in 1988 to build capacity for research, to support economic policy making, it was at a time when most African countries were proactively engaging in policy reforms following years of very poor economic performance at the time. And at that time, there was really little capacity for homegrown initiatives like what we're doing today. You know, at that time, most of the establishing principles and approaches came under what we call the Washington Consensus, which were not homegrown and not adapted to our specific countries. Most of this information were coming from Washington, from the World Bank, from the Department of International Cooperation in the US. So hence that was one of the key reasons why AERC came to exist, you know, to generate that evidence that would provide policy options to African governments by the specific country itself. And the work of AERC is broken down into three main functions: research, training, and policy outreach, and really it's the synergy between the three that really allows us to reach our key objectives. The collaborative program, which is an initiative to engage experienced regional economists on topical issues with policy application and adoption. And they often partner with other researchers outside Africa to tackle issues on an even broader scale. We have the thematic research, which is designed to build capacity for individuals through research proposal submissions under defined thematic groups to address key challenges over very large spectrum of thematic issues. And up till today, it's more than 4,600 thematic researchers from 41 sub-Saharan African countries that have benefited from thematic research. And then very importantly, AERC started as research, then moved into training and capacity building. In 1992, the first major training program was the Collaborative Masters Program, the CMAP. It was established to produce high-quality graduates, researchers, policy analysts for the public sector. The CMAP is currently offered in 26 universities in 21 countries in the sub-Saharan region. We built in 2002 the collaborative PhD program to further strengthen supply and quality of economic researchers, policymakers, academics. This is offered in 8 universities across the region, in I think six sub-Saharan African countries. And then when the development focus was moving and shifting to agriculture, nutrition, food security in the region around 2005, we then established a collaborative Masters in Agricultural and Applied Economics, CMAAE. This training program is now offered in 17 universities across 13 countries in the region. So in total, it's more than 20,000 experts whose skills and research competencies have been enhanced across sub-Saharan African countries in various sectors, including agriculture, environment, finance, monetary system, and policy-making institutions in the region. But you find our experts in IMF, at the World Bank, at the African Development Bank, really across the region and internationally. And the third function, which is what I'm in charge of, is the policy outreach function, where we expand influence by fostering the promotion of economic policy research, knowledge sharing, dialogue, through a creation of a knowledge hub at EAC. This is where we promote policy collaboration, networking, as we're doing here today, and with all stakeholders in the economic, academic, policymaking, and development sphere. And as of today, this network of EAC, which is extremely valuable to us, to the continent, is a vast network of universities, central banks, ministries of finance, multilateral institutions, think tanks, and many more. And a lot of our economists who participated in this research and this training are now in very prominent positions across the continent, and that allows us to have more impact, you know? Just looking at our previous executive director, who's now the Minister of Finance, the CS in Nairobi, Kenya, is a good example. And there are many, many, many more across the continent who are heading central banks, ministries of finance, another example, recently we had a visit of the president of the Afrexim Bank, for example. He's also part of the network. So really, we are really across the board, and that's important for us to keep this network alive and thriving and growing. And how do we do this? We organize events across the continent. We also have a very dynamic social media platform. Our reach per quarter is more than 4 million. We have a very good e-newsletter that we send every week, where we invite people for events. We send out a call for proposals, vacancies, we push the activities that we do, workshops. So if you're not on our mailing list, please, maybe through EPRN or directly through me, you can send us your email address. We'll add it to this list, and this will really be, I'm sure, very useful for so many of you. We also have the website, which is very comprehensive and has an e-library. We have a lot of publications. Everything is open, and I'm sure it will be of good support to the important work that you're doing here. So ladies and gentlemen, in terms of the project that we're talking about today, Digital Financial Services for the Poor, DFSP, which is also referred to as Inclusive Finance and Market Development for East African Economies. It's a collaborative research project supported by BMGF, which I sincerely thank for their support. And the key objectives are to study and detail financial inclusion and market development in the East African region that can be used to advance the knowledge base and policy landscape in sub-Saharan African countries. And secondly, to characterize financial development, market developments, as well as electronic payments interoperability, to draw lessons that can drive policy actions in the region. It's very important to note that this key project is very, very strongly aligned with our EAC strategic plan for 2020-2025, where its close alignment is really in terms of improving quality and expanding influence in the region. To achieve these objectives, we have undertaken a set of reinforcing activities in 6 East African countries, including Kenya, Uganda, Tanzania, Burundi, Rwanda, and South Sudan. And this has been done in collaboration with institutions and researchers, and we've produced over 20 papers for the project up till now. So this dissemination workshop today will help us in increase awareness and understanding of DSFP, provide policy actions with a platform to discuss, strengthen cooperation and networking around the FSP, and further identify policy gaps and windows of opportunities to accelerate Africa's economic growth through addressing the DFSP constraints. And finally, I would like to again really thank BMGF, without whom it would be difficult to implement a lot of the projects that we do, including this one. And I thank all the stakeholders today, and as we shape new research findings, pave new policy directions, initiate innovative practices in the areas of DFSP. So thank you very much. Enjoy the workshop. And I look forward to hearing from you all from the different presentations. Thank you very much.
Thank you, thank you. Thank you very much for wonderful words. Yeah, allow me to, or join me to welcome the guest of honor, Mr. Chris Songa Musonera, who is representing the Central Bank of Rwanda, to give us remarks.
Good morning. Thank you so much for inviting us. I'm here representing our Director of Financial Sector Development and Inclusion. That is a new department at the National Bank of Rwanda that is in charge of financial inclusion, but also sector development. So we have different projects, different initiatives that we do that really are correlated with the research papers that we are that are being disseminated today. And it's very important for us to be here as the National Bank of Rwanda. Besides our usual mandate of financial stability and monetary policy, we also are venturing into financial sector development and financial inclusion. So thank you so much, EPRN, for inviting us, and also ARC for supporting this, this research. I would like to first talk about some of the things that are really very important for us at the central bank, but also in the financial sector, especially about financial inclusion. We conduct different surveys, including the FinScope. FinScope is a survey that we do every four years. It's a consumer survey report that really looks into what are we missing in the financial sector, what is the state of our financial sector in terms of financial inclusion, access to services, usage of services, but also look into the thematic reports such as gender inclusivity, things like people with disabilities, things like I'll say diversification of financial services. So those are the things that these reports look into. And some of the findings for the FinScope that was, the previous FinScope that was in 2020, found that there is a good access. The access level that we have for financial services is good at 93%. We believe that at least 93% can now access financial services. But there is a difference between access and usage. When it comes to usage, there are still some gaps. There's still, let's say for instance, between male and female, women and men, there's still a big gap. Not very big, there's been a progress from 2016, but still there is a gap. When we talk about, for instance, on the number of loans that are dispersed to men, they are higher for formal institutions such as banks. They're still higher than women, but surprisingly, women borrow more than men. So they borrow, but they borrow more on the informal side of the sector. So when you come to the formal sector, they are not trusted. I don't know why, but this type of research can solve those kind of questions that we have. You find them more into the informal sector, such as Ibimina, such as different groups that they create. And we really also found that some people prefer to go into institutions that lend them faster. They don't care about the interest rates, and they prefer to go into those institutions. And really, we try to understand why do they choose those kind of institutions when they know there are others that can offer interest rates that are lower. But these are the questions that really can be answered through research, through surveys, and these research papers, I hope that some of the questions will be solved. And at the National Bank of Rwanda, we also believe that digital financial services are very important to reducing the gaps in financial inclusion. We've seen the importance of mobile money since the introduction of mobile money. We've seen how the sector has grown in 2012 to now. Almost every Rwandan has mobile money. They are able to transact digitally, and this is not only payments. We look at digital payments as a broad thing. We look at they have access to digital loans. People have been able to have digital loans different from what they could get at banks. The banks need some collateral, they need some background check, but using alternative data provided by digital financial services, they're able to create a profile for you and be able to lend and give you money. So this is very important when we see the importance of technology that can really have an impact on people. And we particularly when we want to reduce these kind of gaps at the National Bank of Rwanda, we went into seeing how can we support the informal sector. We do not want to make it formal by force. They can survive, they can be helpful when they're still informal, but how do we protect them? How do we protect their money? So there was a recent saving groups map that we did all over the country, and we were able to to register every saving group in the country. And we created a map that is now available on our website that shows you where the groups are, how are they transacting, how much money are they lending between them, how much are they saving. And this helped us to create directives that are going to support fintechs that are digitizing these groups, because we've seen interest from fintechs who are trying to attract these informal groups to come and save.
A banking hall on a routine working day, and before I was asked what I wanted, someone said, "Excuse me, sir, today is not a begging day. You'll come back another day." And that statement is quite unfortunate, because financial institutions, I'm hoping that we have a good number of financial institutions here, because this message is meant mainly for financial institutions. So financial institutions are expected to serve everyone, irrespective of disability status, irrespective of gender. So that's really one of the main reasons why we try to do research, to understand to what extent are persons with disabilities included in both the traditional and also the digital financial services. And this is the main motivation for this paper, which I'm going to present today. And we hope that the key messages that will come out of the presentation will go to the policymakers, because we have stakeholders who have different responsibilities when it comes to promotion of financial inclusion for persons with disabilities. So we are happy to have officials from the National Bank of Rwanda, the Ministry of Finance, and other government institutions. And also we are happy to have representatives from the civil society. I've had a lot of people from disability organizations, especially this side of the hall. So we hope that the evidence can be used in advocacy for the representatives of people with disabilities. And hopefully we work together to devise evidence-based solutions to the disability gap in financial inclusion and digital financial services. Thank you once again for coming, and I'll now go straight into my presentation. Okay. So the presentation is going to be mainly brief, focusing on a little bit of background, why it is important to have the presentation. I think I've given already a hint on that. And then the objectives, briefly. And I will talk about the methodology without being elaborate. And then I think the last part will be mainly to talk about what can be done. The main focus of this presentation is what can be done. Okay, next please. So as a little bit of background, so financial inclusion rates have increased quite substantially globally and also in Rwanda. And the reason why financial inclusion is important, because it's actually one of the key tools for raising finance for investment. It's one of the key tools for raising finance for consumption smoothing and ultimately poverty alleviation. So without finance, it becomes very difficult to talk about poverty reduction, vulnerability reduction, and of course linking to so many of the several sustainable development goals. But then you find that 1.4 billion adults globally have no access to financial services, and that's a very, very big number according to the Global Findex data. And for Africans, it's only slightly more than 1/2 of adults in Africa who have at least a bank account. And there are so many issues that limit people from accessing and using financial services: the distance, the cost, the information asymmetry, name it. And I'll specifically point one aspect of social inclusion in financial services globally. So there are some numbers from the World Health Organization that about 15% of the global population has at least one form of disability, be it physical, visual, mental, name it. But then, so one would expect, okay, maybe since they are 15%, maybe they're expected to form about 15% of the clients of financial institutions. But when you look at the clients of microfinance institutions, these persons with disabilities form only 0.5%. And the question is, do they have the capacity to use financial services? Is there an issue that keeps them away from using financial services? Are they discriminated against? And this is a global picture. I haven't gone to the case of Rwanda. And asking the question of whether persons with disabilities have the capacity to use financial services, we see that 80 to 85% of them do, according to the Center for Financial Inclusion. So the question is, what's the missing link? And we're trying to find the missing link through research, understanding the drivers of disability gap, and then the recommendations. For the case of Rwanda, we have the Financial Sector Development Strategic Plan, which aims at broadening and deepening financial services in the country. And of course, when you talk about broadening and deepening, you're thinking about leaving no one behind. And we have had What do we see in terms of disability? What are the numbers or what are the proportions? So we see that according to the FinScope 2020 survey, about 16% of adults, the respondents of the survey, had at least one form of disability. And if you break it down, most of them had physical disabilities in either legs or arms, and followed by visual disabilities, which I'm calling the blind, and then the rest have some other forms of disabilities, and those include psychosocial disabilities, mental, and there are also those who have multiple disabilities. For example, someone cannot speak, at the same time they can't see. So those are multiple disabilities which are included in the others category. Next, please. So now the question is, now we're going to the real issue. Are there any gaps or differences between persons with and without disabilities when it comes to some of the platforms that are supposed to help them use and access financial services? And the first thing I present here is access to digital platforms. Ownership of a computer, ownership of a mobile phone, ownership of internet. Because those are, for example, when you look at digital financial services, those are the necessary conditions. You need to have a mobile phone or a computer supported with internet. Without that, you can't use internet banking, you can't use mobile banking. And so when we present the difference in ownership, you can see that people with disabilities have lower rates of ownership of mobile phones, computers, and the internet. Already from that, we can see that the foundation is already disfavoring. You can already see that there is a potential gap when it comes to usage of digital financial services. And we also, on the right panel, we also have an indicator of access, let alone ownership, because we know that some people are able to use the digital platforms owned by someone else. You don't have to own a computer to use it. So now we ask ourselves, maybe they could be accessing those platforms owned by someone else. But still you can see, even when it comes to access, so access means here, access to a device which is owned by another person. So still you can see that even when you talk about access to a device owned by someone else, persons with disabilities still have lower access. So already the playing field is not leveled. So when it comes to digital financial services, the issue of inclusion, equity, and equality becomes questionable. Next, please. So now, how about ownership of accounts? There are so many indicators of financial inclusion and digital financial services, but we just selected a few of them. But in the main paper, which can be provided for those who want to read it. So there are so many other indicators besides these ones which you can see here. So when it comes to ownership of accounts, and I'll be clear, the figures you see here, you see, are ownership of accounts, not access to accounts. As I mentioned, there are those who access or use accounts owned by someone else. So if you see some numbers are different from some numbers you have seen somewhere, I just want to clarify that this is ownership of account which is written in someone's name, not just usage. So having said that, we see that ownership of a mobile money account, as you can see the first panel in the graph, is much higher for persons with no disabilities compared to those with at least one form of disability. And the same applies to bank account. Having an account registered in someone's name, the proportion of the adults is higher for persons for the group without disabilities as compared to those with disabilities. And the same applies to other forms of accounts and also services. We have credit card, mobile banking, internet banking. Still we see a disability gap in all those indicators. So the question is, what's happening? What's going on? We shall find out some of the reasons and then potential solutions. Next, please. So now I've just used some of the examples of some of the indicators, but I said we have so many indicators and the gap is there, be it the propensity to save, I mean the likelihood of saving. People with disabilities save less in terms of propensity, but also in terms of amount of money saved, amount of money borrowed. As I mentioned, I've not presented some of those results, but they are available in the main paper. But the main conclusion is the same. We see a gap in all those indicators. So now we go to the regression analysis. As I mentioned, I'm not presenting the equations that produce the results. For those who want to have some technical background to these findings, the paper can be provided. But for the sake of this workshop, let me just explain what the figure is. So first of all, in each of those two figures, what you see, we are looking at the determinants, which factors influence an individual's decision to register an account with mobile money on the right and with a bank to the left. Why is it that some people register for a bank account and others don't? There are reasons, and those are the reasons we are trying to find out. The reasons are listed there, or the factors that determine account ownership are listed on the vertical axis of these two graphs. We have, for example, disability, gender, age, urban, household size, education, province, and others. So how do we interpret the graph for everyone to really understand what's going on? You can see the vertical red line starting from value 0.00. So that is the line which is supposed to tell us which factor, where each factor stands in terms of contribution to ownership of those accounts. So any factor which has a blue dot to the left of the vertical line means that factor reduces the chance that someone will own an account. And the factors which have dots, the blue dots to the right of that vertical line, represent the factors that enhance or enable, positively influence the chance of having an account with either a bank or mobile money. So having said that, we can clearly see the main purpose for this presentation for disability, which is the first factor. Disability versus no disability. As you can see the dot, which is to the left, that is to the negative side. That means having a disability reduces the chance that someone will sign up for a bank account. Of course, we don't see the reasons here. We're just seeing the differences. And so in other words, if we have person A and person B who have, considering all the different characteristics that they have, but one has a disability and one doesn't have a disability, the one who has a disability has a higher chance of signing up for a bank account. There are reasons, of course, which we shall explain. And of course, other factors are there. We have gender. There is also I will not talk about gender because I have another paper on the gender gap. We have actually 2 papers on the gender gap to be presented. But I want also to mention the effect of education. I wish we had the Ministry of Education, MINEDIC. So education is very important when it comes to financial inclusion. There are mechanisms through which this happens, for example, promoting overall literacy, which is important also when it comes to financial and digital literacy. So the higher the education, the higher the literacy, and of course, the higher the chance of signing up for an account because someone understands what they should do with their account. And of course, finally, the province. I included this because it's very important. We are all aware that the quality of financial services we have in urban areas, not only in Rwanda, but in most African countries or developing countries for that. In rural areas, the quality of services is much lower than the quality of services in urban areas. Leave alone the access, but also the quality, the reliability of the network, access to agents, the float for mobile money agents, for example. So overall, you can see that in other provinces besides Kigali, being in other provinces, for example, the south, west, east, and north, reduces the chance that someone will sign up for a bank account or even a mobile money account. There are many reasons which we shall explain, partly contributing to that. So basically, those are the factors that determine someone owning an account. Whoever might be designing an intervention, we know where to start from. We know which factor to trigger in order to promote financial inclusion for different groups of people. Next. So the same applies to saving, and also, for example, the left-hand side, you have the propensity to save. So what determines the saving decision? Again, you see that having a disability reduces the chance that someone will save, and also the amount of money that is in the right graph. The amount of money saved by people with disabilities is much less compared to that amount saved by persons without disabilities. Of course, as I mentioned, the reasons are there, and we could try to understand and maybe think together on how to address them. Next. So now the question is, what's exactly going on? So what I've presented so far is the magnitude of the gap, the disability gap. But now what are the drivers of the gap? Why is it that persons with disabilities have lower access to financial services and lower usage? What are the key issues? And these issues we got from the key informant interviews which we made with the stakeholders, including those who are in this room, in government, the financial institutions themselves, the civil society organizations, and others. So talking about the reasons, I always say that you cannot have a solution to something you don't understand. So if you want to devise if, for example, the National Bank of Rwanda wants to come up with a solution to the disability gap in whether conventional or digital financial services, the first thing is to understand what is causing it. Then you know what exactly to do to address the cause, not necessarily the symptom of the problem. So that if, for example, we have organizations representing persons with disabilities, if they want to advocate for financial inclusion for persons with disabilities, they need to know what's happening, what are the limitations. So the evidence in here should be also important for advocacy. So the question is, what are the drivers of the disability gap? One is an issue of literacy. So we realized that the overall literacy, that's one. The financial literacy, that's two. And then third, the digital literacy. Those three indicators are much lower for persons with disabilities compared to those without disabilities. And to use financial services, someone has to have some minimum level of financial literacy and also digital literacy. And if the literacy levels are lower for persons with disabilities, then it means the way they access and use financial services has to be quite different from those persons without disabilities. And that's one of the main drivers. We can go into the details. For example, when we talked to stakeholders, some of them mentioned the issue of inclusive education. And that's why I said I wish the Minister of Education was here. So inclusive education. So to what extent is education inclusive, taking care of the special needs of persons with disabilities? So I've done comprehensive analysis on this, education, health, and other sectors. And inclusive education is one of the key issues in the case of Rwanda. And it actually translates into lower literacy. And for example, someone needs a braille reading machine. And so to what extent are they available? That becomes an issue. Someone needs sign language. Then the schools have to have those inclusive education systems. And that is not only for education, but also for all programs that are meant to promote financial literacy and digital literacy, the delivery channels. Okay, so then I also talk about the awareness. The persons with disabilities have lower levels of awareness. Of course, so how many advertisements on TV come with sign language? I don't have the numbers, but it's a question to ponder about. How many people can really comprehend the adverts issued by financial institutions, mobile network operators? How many know how mobile money works? The information is mainly meant for an ordinary or non-disabled person like everyone in this room. It's actually unfortunate that we don't have any person with disability in this room, visible, because I was going to wonder whether they can really understand what I'm presenting. Okay, great. I'm happy you are present. So, but basically when you talk about adverts, people don't understand. People target adverts to people who can listen, hear, see, but you don't have sign language and other forms that people with different types of disabilities can understand. When I talk about disability, I don't mean physical, because if I have a physical disability, I can read the news, I can hear everything, right? But how about those who cannot? So that's a problem that affects awareness for these people. And when you talk about documentation, and this is specifically targeted to financial institutions in this room and also beyond. So the documentation is very, very complicated for people with disabilities. You go to apply for a loan, you have to sign here, you have to fill this document, you have to fill ABCD documents. And one person actually told me that you need thumbprints are sometimes not accepted by some financial institutions. So, the forms, how do you fill a form when you can't see? The privacy issues. So the support given to these people by financial institutions is still lacking. And also the collateral. Collateral, of course, the lower levels of economic activity by persons with disabilities also translate into lower levels of access to collateral, which is needed by financial institutions to access credit. And then we also have a negative attitude by some financial institutions. I'll say some, so that I don't generalize. I already gave an example at the beginning of the presentation. And then physical accessibility. That's a very, very big problem. When you go to even the head office of some of the banks and financial institutions, you can't have a ramp for a wheelchair, but we have a building code. I think you are aware, those who know the building code, I think enacted by the Rwanda Housing Authority. We have a building code, but the question is, why don't financial institutions have a ramp, an elevator, or anything that can help these people to access, or even toilets, special toilets? Those are some of the enablers that people with disabilities want to have, even to visit, just to visit to understand what a bank or a mobile network operator offers at their premises. So in the beginning, if I'm limited, I can't approach the financial service provider. I would rather keep back and assume it's for those without disabilities. And this is something to be thought about by financial institutions, please. Then also we have the issue of disability mainstreaming in national policies. We have some policymakers here. And then others are the usual low levels of income. Without income, you can't save, definitely. You can't invest, so those are limitations. And then the limited disability-friendly products. Financial institutions need to do some research and understand what products persons with different types of disabilities need, and of course not think about disability as one basket, but think about the blind, think about those with mental disabilities and how can they be supported. Next, please. So this is my last slide, and I think I want everyone to really think about this. The reason why I separated these recommendations is that we have different types of stakeholders in this room. So it's not just for decoration, but I intentionally wanted everyone to really pick what they can do. Of course, there's more to that, and I'm happy to receive your contribution after this. But let's start with what policymakers could do. In addition to all the wonderful effort that has been put in, which has so far promoted financial inclusion and digital financial services. So what else could policymakers do? And here I mean also including regulators. So one, we saw the issue of literacy as one of the main limitations to financial inclusion and digital financial services of persons with disabilities. And we, of course, have had recommendations. Let's have financial literacy programs. Let's have digital literacy programs. And of course, I can as well make it here, make this the same recommendation here. But the question is, how can we do it better? How can we deliver the digital and financial literacy programs through platforms and channels that are sensitive to the special needs of persons with disabilities? And that's what we can do differently going forward. Because digital literacy programs, there are some digital literacy programs, and there are some targets in the National Strategy for Transformation with some interventions which have been done. But the question is, how do you, if I have a visual disability, how do you give me digital skills? How do you give me financial management skills? How do you communicate to me so that I understand what you're trying to teach me? So that's, in this case, we are actually talking about inclusion, disability inclusion within the digital and financial literacy programs that exist already, because they are programs available, but how do we make them inclusive of persons with disabilities? Sign language, Braille, and others. So then the other one would be to enforce the building code. As I mentioned, we have a building code enacted by Rwanda Housing Authority. So perhaps the regulators, the National Bank of Rwanda, RURA, and others could try to enforce this code, working with Rwanda Housing Authority, to make sure that financial institutions have at least some of the basic accessibility features at their premises. And I think that's the role, that the National Bank of Rwanda and other regulators and policymakers could take the lead in that, and then financial institutions could perhaps implement. So then we also have knowledge and awareness campaigns. So the first awareness campaign, and I think this one has to be, of course, in collaboration with organizations representing persons with disabilities. How do you have awareness campaigns to break the disability stereotypes, like the ones I mentioned, come back tomorrow, today is not a begging day? How do you break those stereotypes, thinking a person with disabilities has come to beg instead of transact? So we need to break that. And there is also another important aspect which the organizations for persons with disabilities mentioned during interviews, that they sometimes don't understand some policies. If you have, for example, the National Disability Policy, which is available, if you have the Financial Sector Development Strategic Plan, which is available, how do you make that understandable to someone with a disability? And someone suggested having some summaries of such important policies, very brief summaries, which communicate the key messages to people with different types of disabilities. And of course, also organizations representing these people could use those for advocacy. So that's a recommendation which came from these organizations. And then mainstreaming. We have had, I think, a lot of gender mainstreaming in policies, and now we are talking about disability mainstreaming. And I'll give an example. We have the National Employment Policy, which is available. So the question is, how do we make sure that as the policy guides employers on how to treat employees, for example, how should it guide employers of persons with disabilities, or how should it encourage potential employers of these people to facilitate them, first of all, during interviews? There must be some guidelines, sign language. Of course, some of these recommendations are a bit difficult to implement, but it takes time. And the organizations representing these people believe it can be done, at least gradually. So within the National Employment Policy, there's need for a guide, step-by-step guide. This is how you guide, like, if I'm an employer, this is what I should do to recruit a person with a visual disability. During interviews, I need to facilitate these people with A, B, C, D facilities so that they can equally participate in interviews. And during work, this is how I should treat these people. So those kinds of specific and practical guidelines are needed by, potential employers, and this could be done by the policy makers. And then finally, for the government, is to scale up government guarantee schemes. We have very interesting schemes with the Business Development Fund, BDF, which help people to access credit without collateral. So how do we de-risk lending to more persons with disabilities? I've so far documented the success created under those government guarantee schemes. They are doing very great wonders for these people. So how do we scale up so that more people access them, even in rural areas? I have no question to that. It's a question posed to everyone, but especially policymakers. And then for financial institutions, there is a lot to be done, sensitizing your services. Some people don't understand some of the services you provide, especially because of the communication channels that don't favor them. So how do we sensitize the people? How do we communicate our services to them? And how do we develop disability-friendly products and services? That's a question that I have a partial answer to that, which can be through, of course, first of all, through research and development, but also through something which I'm trying to pitch with some of the policymakers and financial institutions, and that is capacity building in terms of big data analytics. Why is it important? Because when I don't understand that person A has the potential to borrow and return the money, what I would do, I would tend to avoid lending to that person. But what if I did some kind of analysis to understand, for example, the loan repayment rates or the default rates, this is to financial institutions. If I do some analysis and see the default rates for persons with disabilities, existing customers, is actually not higher than the ordinary person, then I have to think twice when I'm rejecting a loan application of a person with a disability. So how can we have capacity building programs in data analytics for financial institutions? How can we invest in research and development in order to develop products that serve the interests of the persons with disabilities? And then, how do we pursue disability-inclusive service delivery, customer care? How do we recruit some people who are CSOs? The role is mainly for technical and financial support to financial institutions in implementing whatever recommendation you're seeing there. Next. So in conclusion, we have seen that financial inclusion is actually growing, and of course, thanks to the government, thanks to development partners, financial institutions, for the milestones so far. But then the question is, how can we have more disability inclusion? I'll talk about disability inclusion because gender is also another one in another paper, but how do we ensure overall social inclusion in financial services? And as I mentioned, we need to have some mainstreaming of policies, regulations, implementing disability-friendly policies, and then products that serve the special needs of persons with disabilities. And I think with that, thank you so much for listening, and questions are welcome. Thank you.
I want to ask Dr. Kasim to step forward so that you'll be able to respond to questions. So let us take questions. I think we have been able to follow the presentation. We didn't be able to share with you before the research papers that you can read, but at least you have some, understanding on the content. So let us take some comments, additions, because I think you can share with us some information which can even help him to improve more the paper if you have some related knowledge or information or data, or you have a question. It can be, you can disagree on what was presented or reinforce, I don't know, whatever you want. Can we take like maybe 5 reactions on the presentation? You identify yourself, the name and institution you represent.
Good morning, ladies and gentlemen. I'm Kevin Nge. I come from the Netherlands Embassy in Kigali, Rwanda, and I'm in charge of private sector development at the embassy. Thank you very much for this presentation. I just have a comment, especially when you're looking at the side of financial institutions, myself having experience of 7 years in financial institutions in Kenya and also in Rwanda. I think the part where you've mentioned about data analytics, that is spot on. More needs to be invested in that, and financial institutions need to take a deliberate strategic approach towards ensuring that not only their staff, but the entire ecosystem within the banking sector, they're able to invest and do a lot of data analytics for people with disabilities. And then secondly is also the element of artificial intelligence, which I'd like to bring in, because with incorporating also artificial intelligence within the banking system and with all the numbers that they have, if it's the deposits, liabilities, the risk analysis, this can unearth a lot of information which can feed into them making informed decisions and de-risk and look at strategic ways in which they can be able to lend more to people with disabilities. And then last but not least is also a strategic partnership with development partners. From the Dutch side, we have the Dutch Entrepreneurial Bank, and I know they work with quite a number of financial institutions within Rwanda, the likes of I&M Bank, and also with Equity from the group office. So I think even as financial institutions are having discussions on credit de-risking facilities, the agenda of people with disabilities has to be on the table in terms of what credit de-risking facilities can these development banks put in order now to assist the banks in Rwanda to be able to de-risk more as they're lending towards people with disabilities. Because from my experience, that's a conversation that usually doesn't come up. So they'll be looking at targeting, let's say, people with the micro, small, and medium-sized enterprises or the SMEs, but not removing now the people with disabilities within that specific target market and seeing, so what instruments can we be able to specifically and deliberately target for people with disabilities, if they're the micro, small, and medium-sized enterprises, or if they're the SMEs who indeed get left out when it comes to them eventually being lent to. Thank you very much.
No other question?
I'm there. Thank you. This is Gaudence Mushimiyimana speaking from the Organization of Women with Disabilities. I congratulate EPRN for this kind of putting together all the information that was needed to make sure that persons with disabilities are also taken into account when it comes to financial inclusion. I just wanted to comment on some two things. When we say disability exclusion or people with disability left behind, we need to stop like seeing person with disabilities in the angle of who they are, their disability. It's not a matter of who you are. It's not a matter of disability. Like when we say disability reduced chances, is that really the matter? That this disability that reduced chances to access services? It's not. It might not be, because we are all quite different. We are all having different barriers. It's not a matter of who you are, rather a matter of the barriers that surround you. When we say it's a matter of disability, this is where discrimination starts. Because you are not seeing the person as a client, you are seeing the person like someone with limitation, with limited capacities. And then you start thinking, maybe she needs special support. The word special itself frustrates people. It frustrates service providers, because they see you someone different from other people, someone from other clients. When we say like ramps for person with disabilities, they are not only for person with disabilities. We all need ramps. We all need a specific toilet depending on the situation where you are. Either you are pregnant, either you are older, you may need some specific, some reasonable accommodation. But when we say special, when we say disability limit people, this is victimizing people with disabilities. So this is where we need really to start if you want to tackle the issues of discrimination. But also we need to talk about institutional barriers. All was said, well said, but we still have issues of denial of legal capacities, specifically for those people with psychosocial and mental disabilities. They cannot sign a contract. Whatever degree of mental disability you have, you are denied the capacity. And this is by our policies, our laws, and we need to really talk about and work out such kind of policies that we still have even within our banks, our financial institution. We cannot talk about digital without talking about the issues of extra cost attached to technologies. We need to involve private sectors. So whatever they design in terms of technology is for everyone, universal design. When they design a specific phone for person with disabilities, they design in terms of, as they are targeting a small number, and the cost of the phone is of course very high for the person to afford. If they design a computer for specific group of people, 15% of people with disability globally, it's a small number to design a computer. And this one is very expensive for the person to afford. When we say access to our financial institutions, we can imagine how long it takes to afford a loan in our financial institutions. Someone is using a wheelchair. Even getting to the bank, he or she is using special, specific transport. Cab, it's very expensive. And she's attending 1, 2, 3 times, even 4 times. This is extra cost. When he's using maybe he's visually impaired, 3 times attending a bank means someone extra accompanying the person, and this is the family losing, because 2 people are attending the bank for a loan. All those are the challenges that we also need to address as we want people with disabilities to access financial services. Thank you.
Good morning. My name is Brote. I'm the head of product and business development in EcoBank. I want to stress on the point that my fellow colleague mentioned in terms of providing special products to these people with disabilities. What I want to add on is that whenever I think of product development and you are thinking of designing something special, then that makes a standalone product from the overall portfolio of the bank. I'm speaking from a perspective of a bank. So you will find that if I'm running a portfolio where I'm going to get 5 billion, and there is, as he said, another portfolio of 300,000, the effort will not be the same. So what I want to stress on is that we don't need to separate these people from our portfolio. It's okay, we can design a checklist, a criteria that favors or which makes, for example, as she said, if this person is visually impaired, she might not be able to read all terms and conditions, different stuffs. So we need to be creative, but not separating their products from overall product offering of a bank. Otherwise, you find that you are designing something, but which doesn't going to have the full support, if I may say, rather than looking at it as overall portfolio that you're offering to, because they're all customers. We work, some of us coming from financial institution, we are not NGOs. Of course, you're looking for money. That's why we are getting our salaries. So what I want to mean is that we agree that we need to empower all these people, but at the end of the day, we need to keep in mind that for a product to perform well, it should be looked from a business perspective, if I may say. So as the research and the institution did a very good job, but again, we need to consider that at the end of the day, there is a cost, as she said, that is going to be in these products. Because today, how many banks have a mobile app which can, someone who is visually impaired can use? Few of them, because of what technology and the cost. So we need to think, of course, there is investment, but again, what return are we going to get out of it? So if we make it as overall product offering, it will be better. Thank you.
Good morning, everyone. I'm Dr. Gisana Wagabo from Adventist University of Central Africa, known under Mudende, former Mudende. I appreciate the presentation done by the name again, Gombe Kasimu. You are bringing up a topic that is very sensitive, whereby you try to mention problems that hinder some people to access financial services, if I'm right, I got it right. However, will not stick on specific product. We should stick rather on mindset of business from financial institutions, because facilities that facilitate people with disability are provided at another level except premises. You cannot talk about a computer specific to a person with disability. You cannot talk about any other facility in the bank or any financial institution related to that person. I would emphasize on considering that person as an opportunity. What kind of product can we develop that caters also for people with disability? Moving to the next is a technical one. When you presented regression output, I did not understand what kind of regression techniques you have used. Second, numbers that are there are coefficient or are what? If they are coefficient, we would like to have also an information about the significance of parameters estimated. Thank you. That we can allow Dr. to respond. I think there is no other question. We'll take one more.
Thank you very much, everyone,
for these contributions. I appreciate they help us to improve on the work, and not only just improving on the work, because the work is just a piece of paper, but actually transforming disability inclusion. That's the main purpose. So every comment is very appreciated because it contributes to the overall reduction of the disability gap in financial services. So I will start by clarifying on the comment by the first commenter. For the first commenter, I think most of them were additions to what can be done. Thank you so much, they are appreciated. And for the second commenter, I'll first of all clarify some of the terms used. When I mention disability reduces the chances, I say that because, I mean, that's regression language. That's regression language. It's purely just a language. I'm not saying, I tend to understand, having worked on disability, I tend to stay away from words that may be interpreted as disability having lower capacity, which I don't believe, actually, myself. So when I say disability reduces the chance, that's the language we use in regression analysis, because we are trying to see what factors influence someone's decision to sign up for an account, for example. So when something is negative, as you saw, it means that factor reduces the chance. And I'll come to his question later. So that factor reduces the chance. And now, whether it is voluntary or involuntary, that's something else. And that's explained in the reasons why that happens. So in the regression analysis, I was just indicating how the situation is. If one person has a disability and another one doesn't have a disability, who is likely to have low? The reasons are beyond the control of the persons themselves. Some of them are from the policies. Some of them are from financial institutions. So they are not responsible for, they're not 100% responsible for that lower level. So that language was just a regression language, but otherwise the reasons are far beyond. So otherwise I believe in their capacity to use financial. It's just a representation of what factors contribute to the gap. And when it comes to facilities, special facilities, I do understand. I always meet that issue, and I think it is coming from, from the stakeholders, I should say. Some stakeholders call for special facilities. Others believe there shouldn't be special facilities, but there should be equal treatment. But then the interpretation of that equal treatment becomes tricky. If a bank does not have a ramp, it is an inconvenience to me because I would like to use a ramp, but it's a bigger inconvenience for a person who has a physical disability or even other types of disabilities. So when we talk about facilities, accessibility facilities, we're not trying to say restrict them to persons with disabilities, but we are trying to say have them anyway. Have them. If I have a disability, I will use it. Another person without a disability will use it. What we are trying to say, make your premises accessible so that persons with disabilities, just like others, can conveniently use those facilities to access the services. I'm not saying invest in a ramp and put a mark, this is for persons with disabilities only, but have the ramp anyway. That's what I wanted to say. And for the third commenter, I think it was mainly the same. We don't need to have special products. Now we go to products. Yes, I've seen this comment also throughout the discussions. Maybe we don't necessarily need to have special products, but we could have, like some banks have, some financial institutions have financial products that are for lower end customers, if I may use that term. So how do we have products that address the needs of everyone, whether it is a person with disability or someone with lower income, someone who is a woman, or whatever it is. How do we make sure that everyone in their capacities can use at least some form of basic financial service? And I understand someone from EcoBank, it's a business, definitely. But maybe this is where we talk about collaboration with other institutions, capacity building, technical and financial support. You're not working alone, but you have a role to play. It's your responsibility just like other stakeholders, and that's where we need to have development partners and others to come in to support where there's a business Adventist University of East Africa. So Central Africa, sorry for that. Eastern and Central Africa, right? Central Africa. Okay. So yes, thank you for that question. So you'll excuse us that we chose not to present the technical background to the regulations, but the paper is available and I can personally share it with you, where all these, the methodologies, the equations and everything are presented. But just to, to answer you briefly without going technical, I will say we use three main types of regressions. One, the probability regression, where we have the binary outcome variables to estimate the likelihood or the probability of using, for example, owning an account, using a financial service like saving, borrowing. So we use probability for that, and we report marginal effects for that of transactions, where we look at disability gap at the intensive margin, and for that we use a probability model to estimate the value, and also we wrap it up with the robustness check using propensity score matching. All those are described in the paper. Thank you so much.
So far, my burning question is about three factors limiting people with disability to access form of financial services, like lower income, cost of distance from where they live to the bank, and the disability factor. We found that people combining three factors are living in a rural area. And we would like to hear about the research, from the research, how diverse are digital financial services on the supply side, and if there are some limitation for them to really define and develop appropriate and affordable digital product for people with disability, combining the three factors, which are there for the supply really to serve as required and equitably people with disability in the rural area, combining the three factors: lower income, the cost of distance, but also the disability factor, which limit them really to access those services. We want really to hear about the supply side. What are the limitations? If the assessment really interviewed them, what are they facing as challenges to develop appropriate and affordable digital product?
Thank you. You're asking the presenter, the supply side, or someone from the bank to respond. What do you want? You're asking supply side to respond. Kasim, you are the one to respond, or any banker?
I'm not sure whether I should fully respond, but I'll give my partial response, and then maybe financial institutions can maybe have a better answer. So, yeah, once again, thank you so much for that comment. And I think part of the answer came from EcoBank. Times trying to develop something that will create business impact. So having said that, sometimes developing financial services for rural areas, because you mentioned the rural, having a disability and also low income. first of all, developing financial services for the rural areas has a cost implication. Infrastructure, investment, which is a huge cost. Financial institutions don't want in rural areas because, I mean, there's a cost-benefit analysis they do. If a branch is established, how many people are going to use it and how much money is going to be generated. And that's what they do when they are deciding where to locate their branches. And I think that's the main reason why rural areas have lower physical access. But then, of course, when the aspect of income, I mean, again, it comes to the business aspect. If a product is developed for the low-income people, how much is going to be generated by the bank? That's the question they ask themselves. Is it worth investing research and development in that? So I think those are some of the considerations they make. But of course, I'll give a chance to them to explain better. But that's what I think they do. And for disabilities, the cost is actually huge as well, because you need to think, when you think of installing braille reading machines in the banking hall, audio-visual display, I think they think of the cost implication. And I think that's why sometimes they consider not to do that. But as I mentioned, sometimes it has to be a partnership with other stakeholders to make that happen. So I think that's what I can respond, and I think financial institutions can add. Thank you.
Thank you. From a financial institution? Because the time is done.
Thank you very much. The reason why I want to comment on that is that he used EcoBank because I said EcoBank. So part of the things that he said that in terms of like branch location, I agree that there is a long way to go, but there are milestones that we are achieving. One of them is agency banking, not only for EcoBank, even to other, because we know that the fact of having a branch up country, it's costly. There is a lot of things that has to be there. So one of them is the agency banking, of where down the agent can be able to talk to this person. I will talk about eCash. I think he mentioned something. There is a presenter who mentioned that, of which now we are seeking a way of interoperability. Not necessarily saying that I belong to a particular financial institution, for example, I'm an EcoBank, and I want to pay to someone else in another financial institution, it will be very hard. So I'm talking about access to financial services, as I said. So that's another project in place that we are implementing. Lastly, as he said, of course, there is always that concept of cost. But as he mentioned, there are those pool of funds that are there, of which are being dedicated to particular segment, like women's, like this affordable housing financing, which is available. So all I want to conclude on is that, as he recommended, we become like a vessel, partnering with those international funds to see now how can those funds reduce the cost of funds. Because at the end of the day, if we are lending, if you are providing funds to people, there is a cost we are incurring. But if those donors, those investment funds are in to make the cost of fund cheaper, than to make the product cheaper to the low or middle income people or class. That's all I will conclude on. Thank you.
Thank you very much. In 30 seconds, then we take a group photo.
Thank you very much. I had to insist. My name is UK Gamba. I'm from NCBA Bank. There's one aspect I would like to bring on the table. The question actually going forward is the oldest question: stakeholder versus shareholder value. So, as any financial institution or any business out there, we are given the license to operate by the communities in which we operate in. So, in the community we operate sites, be it non-disabled and with disabilities. So our approach actually to services shouldn't be cost first. It should be actually to think about it in a holistic way. In that note, I would like to bring attention to there's a recent initiative that came up from the NCBA group called Sustainability Transformation. So that speaks actually to the ESG agenda. So one of the main elements is actually how do we promote financial inclusion and financial promotion to all services, to our services, to all sectors and people from all avenues. So to add on what my colleague from EcoBank was saying, yes, cost actually does come in mind. However, there is actually now a necessity to all businesses out there to go the extra mile to not just think of costs and see how to better promote your services and bring value to the community you're living in. So be a partner for growth, not just a business mindset. So I think that's another aspect I would like to put on the table. Thank you.
Thank you very much. Let us give a big applause to the presenter. Thank you very much, Kasim. So I want to propose you that we take a group photo before we break for tea. If you can join, I think we can fit in the photo. Do you want to join me here for a photo? So we do say na photo na the prof. Na photo na cha. You don't know it. That's fine. Na photo na cha why? Do you know it? No. Please let us try to do quickly. I think we can just stand here and they will take us a photo. I am kindly inviting you to join me here. So abafotora batwereke how we can stand, but I think we use this side. Zirahagije? presentation. I team I sharing. The second presentation. As you can see, they printed just abstracts for the papers, but we will send you full papers if you wish. After the meeting, if you registered, you can send you the full papers. But on the tables, they just put the abstracts to have just a summary of the paper. Thank you.
Good morning, all. I think you have enjoyed the tea break. Now we are going to present the second paper of the Economic Policy Research Network in partnership with the ERC. I'm Agnes Mutuimana. I will present this paper with working with Dr. Kansime, who came here to present the first paper with disabilities. Now, the title of the paper is the development of the DFS ecosystem in Rwanda. Next. This is the presentation outline. We can see the background of the DFS and the financial inclusion here in Rwanda. The second point is the DFS ecosystem in Rwanda. We talk about the study objective briefly. The fourth is the methodology and data source. The five is the show how the result, the enabling and constraining factors to DFS development, and also we conclude our study with recommendations. Next. As Kansime said, we have the similar background. These papers have around similar background because what he had to the first paper is that there is a disability variable. Here, as you know, financial services is a key tool for poverty reduction and vulnerability reduction in our country, also in other countries. Not only here in Rwanda, but also in other countries, whether in Africa or the world. The financial inclusion reduces inequality and boosts investment. 1.4 billion adults globally had no access to financial services. Global Findex 2021, only 55% of Africans had a bank account in 2021, lower than the global average. You see that in Africa, the use of the bank account or access to banking banking sector is lower than the global average. We are in Africa at 55% compared to 76% globally. The long distance is a key supply side hindrance to financial inclusion. To be included financially, it requires there is factors that influence people to join or to include in the financial services sector or other financials. The long distance is a key for supply side. The DFS are providing an opportunity for financial inclusion in Africa. As I said in the fourth bullet, you see that in Africa we need to invest more in the DFS because we are somehow far from other countries in the developing countries. Mobile money account ownership increased by 90% between 2014 to 2017. And also the bank account increases by 4%. The ownership is increasing more than the bank. The mobile money account is increasing more than the bank account. You see that the mobile money, the mobile money have many users than those people who can use the bank account. The growth in the mobile subscription is increasing from 45% to 83% in 2020. It is an opportunity to expand the DFS. 54 and 43% adult men and women in Africa without a bank account had a mobile phone. It means that to have a mobile phone doesn't mean you have to access it. You can have a mobile phone, but not access to the digital financial services product. And you see that the women are more, men are more likely to use the more bank account than women. Mobile broadband subscription increases from 8.3 in 2015 to 21 in 2019. This is the sourcing from the World Bank indicator. Next. Yeah, here the graph. This graph shows the digital payment ecosystem. How the digital work among the government, the individual person, the businesses, and also non-governmental organization also, they can contribute to this ecosystem. As you see, the payment in this time, the payment is easy without cash, or when you have your money on your bank account, or you have money on your mobile account, you can't fear to pay any services or any supply, because it is now easy. You can pay as individual, you can pay to from your mobile account or your bank account when you make a transfer to pay someone. When you are employee, you can receive your money through your bank account or your mobile phone. It is now easy. The people have to be to make the payment among them. When you are in a business and as I'm an individual, I want services from you or a supply, you can deliver to me, and I will pay you through mobile money or account. Next. In Rwandan context, here there are many policies and the program to develop digital financial services. First, there is a financial sector development strategic plan from Minecofin. It is starting 2018 to 2024. The second is the Rwanda National Payment System. This is there toward a cashless Rwanda. It is also started from 2018 to 2024. The third is the National Strategy for Transformation, NST1, started 2017 to 2024, which is there to target to increase electronic transaction of GDP from 26.9 in 2017 to 18. Minecofin referred to Minecofin 2017. The performance on DFS indicators, the mid-review of NST1 shows that they have a target of 16% of the digital literacy, but they achieve this digital literacy was achieved on 45% compared to the target of 16%. You know that, you see that we need to increase the digital literacy on the DFS. It is still the gap there. Some DFS indicators for Rwanda, Finascope 2020 and NISR 2020 also shows that the mobile money uptake increases from 38% in 2016 to 60% in 2020. It is also increasing, but still a gap there. The mobile money contributed 30% of the increased uptake in banking services between 2016 and 2020. Rwanda Integrated Payment Processing System is also a program to develop the DFS here in Rwanda. Next. This study have some objectives and the questions to be achieved. There is some objective. The first objective is to examine the patterns, trend, and recent development in Rwandan's digital financial services. The second one is to identify the best practices, enabling and constraining factors through policies, regulation, technology, infrastructure, network coverage, and the others in the digital financial services ecosystem. The third one is to make actionable recommendation for resolving identified challenges to the development, uptake, and usage of various digital financial services in the country. Next. This study was used. There is 3 approaches. There is 3 approaches used as methodology. The first one is the descriptive analysis. The second is regression analysis based on Finascope 2020 data. And the third one is the qualitative data collection from key informant interviews. Next. This the first approach is the descriptive analysis, descriptive statistics from the BNR data, statistics department. The internet banking subscribers, these are the product of the DFS product, like the internet banking. There is internet banking, mobile banking, and also the ATM card, whether debit or credit card, and also the point of sales. Here, the first graph shows us the internet banking subscribers. The second is the number of transactions, and also the third graph is the value of transaction. As you see, this graph shows that there is an increasing trend. From 2012 to 2021, it is an increasing. It means that the subscribers on the internet banking are increasing. The number of transactions also increasing, and also the value of transaction is increasing. Next. The second product is the mobile banking. Also, it seems like the previous, on the previous slide, as you see, also the mobile banking subscriber also increases, the number of transactions increases, but differ from the subscriber. Subscribers are increasing higher than the number of transactions. Maybe there is some reasons here. As you know, you can subscribe using different accounts. One person can have more than multiple accounts on mobile money, as you know. And also he can use, or he or she can use one account as and the other accounts are not working. It is why maybe the mobile banking subscribers are increasing more than the number of transactions. The value of transaction also, it is increasing. Next slide. Here there is a trend of mobile money payment in Rwanda. 2010 and 2021. This is the year of the study. On this product, we take this mobile money as example that representing others, other products. As you see, on the second column, the number of registered subscribers. The third shows us the number of active subscribers. You can subscribe or you can register to the mobile money account, but you can't use that. You are not active, your account. Subscribers are many, but the active for to subscribe is differ from the active subscribers. And also the number of agents increases from 2010 till 21, it is an increasing also. The number of transaction increases, and also the value of transaction increases from the mobile money. This is the trend. It is an increasing trend on mobile money payment in Rwanda. Next slide. This trend also show the card-based transaction. The first one is for mobile money. This is for the card-based transaction. The credit card, debit card, the point of sales, and also the number of ATMs, ATM transaction, whether transaction or ATM values, in value. Next slide. This slide shows the demand and supply, the relationship or the correlation between the demand and the supply side on the DFS product. The first graph, the column, the vertical axis shows us the number of transactions, and the vertical axis shows us the number of agents. You see that there is positive correlation, or the correlation is increasing. There is a correlation of 0.8 or around 0.9 of correlation. The number of as the number of agents increases, the number of transactions also increases. There is a potential to still increase the agent number, will increase the number of transactions for the DFS purpose. And also the second graph, the third and the fourth are the similar. It is also the positive correlation. Next. Here, this graph, the table shows that how the payment through cash or other financial services digitally are increasing, or how people are integrating or are encouraged to pay digital financial services, or how cash is dominating the payment. You see that when in food and drinks, you see that 99.76% paying through cash. Banking transfer, online payment, also it is 0.06. You see that cash is also dominating the payment. People are still paying using cash. Whether digital financial services are known by many people, but they still paying using cash. The most of the payment on expenditure or education in health, they use cash to pay their services or their supply. Next. This is the result from regression analysis where the probit model was used. Without saying much, I want to show how mobile money, mobile banking, and internet banking have affected by many factors. This graph tells us how the factors that influence the adoption of the DFS product. There is, among others, there is many determinant or many factors, and you see that there is a red line, vertical line on both graphs. The variables are somehow similar from on both graphs. This shows us that there is a left hand and right hand. On the left hand, it shows that there is a negative effect on the adoption of the DFS product, and also the variable which bullet is in the right hand shows that there is a positive effect on the adoption of the DFS product. As you see, like the disability or non-disability, the gender. Let me talk on gender. The female versus male. It shows that when you are female, the probability of adopting the DFS product is low than male. Also, when you see on the province, the province also have effect on the DFS adoption product. Here you see when you are in the south and someone is in Kigali, the probability of adopting one of the DFS product is lower than the person who are in Kigali. Because there are many factors here in Kigali, infrastructures, and also the internet, the access to the internet here in Kigali is different from the rural area. Next slide. The qualitative analysis based on the key informant interview. Next. There is some key enabling factors to DFS development. I think there is a slide following previous to this. Maybe let me continue. There is some enabling factors to DFS development from the key informant interviews. Police and the regulators show strong commitment to a cashless economy and guidance to achieve it through digital payment target in the national strategy for transformation. These are key enabling factors. The second one is introducing electronic tax payment like mobile money, mobile banking, internet banking, and also mobile cash. The growing access to both feature and smartphone and associated rapid. These all are there to enable the factors of acquiring or adopting the DFS development here in Rwanda. Next slide. The key challenge to DFS development. From key interviews, these are the key challenge. The low rate of digital and financial literacy. Literacy is a key for the DFS development. DFS development, NST, targeting 16%, and also it achieved on 24%. The insufficient infrastructure includes low and or poor internet coverage is also a key challenge for the use of DFS or for the development of the DFS. The third is the limited interoperability among digital platforms of different services providers. In banking, from EcoBank, he said that the interoperability is a problem. It is a key problem because when you have account in EcoBank and someone in EcoBank and the other in Beka, when you are not in the area where EcoBank is, you can't access to your account, your money on your account. It's a problem. Or also you are using the mobile money and the other use Tigo Cash or Airtel. It's a problem to access money from Airtel, whether you have the mobile money account. You see that the interoperability is a problem. Low awareness level among the general population regarding DFS. Awareness is also a challenge. High cost. The cost also is a problem. Unreliability services. Some people they complain, said that the services are not reliable. Low access on digital services is also a problem. The limited product offering that suit customer needs, it's a problem. The cyber insecurity and low trust on digital financial services providers, and the last is the fear of visibility for tax purpose keep informal sector merchants from using DFS program. Here also, when the people they want to avoid evade the tax, they can. It is a problem. Next. There is a common challenge reported by mobile money users. You see that most of mobile money users, they said that the poor service and agent network is a key challenge for them to use or to adopt the mobile money product. The others, they said that sending money to wrong number, it's also a problem. These are the key challenges reported from mobile money users from the key informant interviews. Next. These are recommendations for further DFS development. The recommendations these recommendations address they are there for the policymakers and the regulator. The second recommendation is for payment and financial services providers, and the third is for development partners. For policymakers and regulators, they have to strengthen the implementation of policies and regulations. As you know, policies are there, but they have to implement and strengthen. The second is to proactive measures for promoting digital and financial literacy, including intervention targeted to specific group. The third for policymaker is to explore regulatory sandbox to allow the testing DFS product and the models. When the DFS is adopted, they need first to testing before delivering to pretended users. The fourth is scale up capacity building for financial services provider to understand compliance requirement of existing regulations. There is also regulation mandating SMEs to accept at least one form of digital payment from clients as part of registration requirement. Encourage SMEs also to use and teach their client how the importance of this DFS and allow them to use and explore and scale up public-private partnership for investment in telecom infrastructure for improved services, mainly in rural area. This to encourage the partnership with the private and the public in order to invest for infrastructure purpose to the DFS for rural areas. For payment and financial services provider, the first is to develop financial product that suits financial needs of specific customer segment. The second is to explore open programming interface, APIs, for information sharing, quicker and cheaper transactions. The third also is the awareness raising initiatives for the public to understand available product and their functionalities. The fourth is to invest in infrastructure. Infrastructure is key for the development of the DFS. For development partners, they have to provide technical and financial support to government and financial institutions, and also to invest in high-frequency data for informed decision-making. Here in high-frequency data, instead of for quarterly, monthly, they have also to use daily data or hour where is possible. To inform decision making on time, to use the real data for decision making purpose. Thank you. Thank you for your kind attention.
Thank you very much, Agnes, for presenting the paper. So it's time to ask questions or comments. As she mentioned, when she started, she worked with the Kasim. That's why questions can be asked to her, but I'm sure as she responds, also Kasim can intervene, or whoever in the room also can intervene. Thank you. Okay, first, maybe we take
for privacy. So a lot has been done, and we keep improving the system. And also on interoperability, there is an ongoing strategy, the Rwanda National Digital Payments Strategy, that has to implement different initiatives on interoperability. The first phase was on eCash, the interoperability between mobile money providers, but soon even banks will be able to to process instant payments, interoperable. And this is also a good step into that. Also, maybe as a question, you mentioned that cost is a problem. One of the, and on different campaigns that we do, we've traveled around the country. Cost is a problem. Cost, and some of them suggest that the National Bank of Rwanda regulate the cost. That is not possible. It's up to the private sector to bring the prices, but My question is, what do you think? Why do you think the cost is still high? And what can be done, especially to reduce the cost without using regulatory powers? Thank you.
Thank you. Thank you for the good presentation. My name is Nadine Rutabairo. I'm the Women Banking Manager in Equity Bank Rwanda. I've had from the different presentation we have had, the first one and the second one, you presented your findings and you presented the recommendations, which are very clear and understandable. Each and everyone here, we are sitting here, we are hearing, and everyone will take his or her homework to her respective institutions. But I would like also to hear from you, the presenters. What is your take home from what you find and what you are recommending? I think we should not do this. It should be like this. If you are pointing me a finger, you should also point another one on yourself. What is your take home? What is your role to overcome all these concerns we are raising here? Because I found that the main challenge we are facing is lack of synergy. Because all these researches, all these findings have been presented even before, and let me talk in the angle of the financial institutions. When we come here, we go back and design products, hoping that we will get the buy-in, because the buy-in, because for us, yes, we are in business, but also we are participating, we are contributing in the development of the country, and part of that is to support the population to grow. So if we are making products which are not making business sense, it's okay. We are going to leave it, because we cannot continue with something that is not bringing impact, because we're investing money. So if we have those products and no consumers, it means what you are presenting there, the capacity of the population is not there to consume those products. Kevin talked about it. He said about the de-risking tools. If we can live here, each and everyone is taking his homework, as in if it's a development institution, if it's a financial institution, if it's another player that can contribute in his or her capacity, so that we can bring together a synergy and then act or respond to the population's need. I think that's the main challenge here. Rather, instead of coming here, sit and hear and go back, nothing is changed. It's better we rather see our synergies and combine them to see the impact it may bring to the society. Thank you.
Thank you. I have two questions. The first question is, you presented a table called Trend of Mobile Money Payments in Rwanda 2010 to 21. And there's some figures really I'm doubting on. Like 10 million to 21, you say 10,439,129 Rwandan francs. I don't know if this is a transaction per day or if it is, because 10 million is too less to be true, because I don't think we have 10 million transaction only. Even daily, it exceed. Maybe you will come up and give us some information. The question number 2, you said that most payments are done used cash. And I wonder, is it because of cost affordability, or it's because of low financial literacy? And ending my question, it's actually the payment, the digital payment system. I didn't see any fact and figures of either most people are paying using internet payment or USSD payment. So can you please come up with some explanation with internet payment or USSD payment? Thank you.
Yeah, good afternoon, ladies and gentlemen. Kevin from the Netherlands Embassy. Thank you very much for the presentation. I just have two comments. First of all, within the context of Rwanda, in order to progressively drive for inclusivity in the financial inclusion space, I think we need to borrow a leaf from what is happening in Kenya. Kenya, the government put in funds that went towards the Hustler Fund, which targets personal loans to individuals, people who traders, people who have small kiosks, small businesses, the people in the markets, the people in the rural areas. And then secondly, there's the group loan facility as well. And this is in collaboration working with the financial institutions and also the mobile financial services providers. I have a sense that what the telecom companies and what the banks are doing is only scratching the surface in terms of the potential that Rwanda has to drive micro lending through mobile financial services. Right? There's still a lot of potential that is there. There are people in the rural areas who need access to affordable credit that are not being reached out to. So it calls for a concerted effort from the government side, from the financial side, and also from the telecom side to come together and to have a similar type of hustler fund. Now the hustler fund, when you're looking at the interest rate, is only 7% per annum on a reducing balance. Very, very low. If you access it, you're given 14 days to pay, interest rate free. And then a question you'd ask is, so how am I assigned a credit limit as an individual? That's where the elements of data analytics and developing a credit scoring based on your SMS usage, based on your call logs, based on your Momo account that you've been using. As you go, you make your Momo payments. So a credit scoring is built against that. Then you're assigned a credit limit, right? And it can range from all the way to 2,000 to 10,000 Kenya shillings, right? You can convert that into francs, right? Now, when you're looking at the numbers as well, already within a period of 3 months of it having been launched, you have 34 billion Kenya shillings which has been dispersed, right? And out of this 34 billion, you have a repayment rate of 85%, which is quite commendable. You also have 20 million customers who are in it. And also there's a savings component to it, because a key problem that plagues also mobile financial services is savings, the savings culture. So out of a small amount of money that is dispersed to you as a customer, there's a certain percentage, around 10 to 15%, that goes towards your own savings, right? So you also get to save for the future. Another angle to it is also a group loan facility, right? So you can have 10 people seated around here, they come together, they have a business idea, but they don't have money. So with this product, out of a group of 10 people, they can also be able to access a loan facility at a reduced interest rate of 8% per annum, again on a reducing balance, which is very attractive, because now people can venture into small type of businesses that are income generating. So the key takeaway point here is that the telecom companies plus the banks and also the government as well need to have value proposition products to customers, so that the customers now, people in the rural areas, can see the sense, all right, let me not pay cash, let me not do this in cash, but I can be able now to know that if I make my payments at the small kiosk, if I'm paying my groceries, all these different things, there's a key value proposition in terms of me as a customer getting access to cheap and affordable credit as an individual, but also I can team up with my neighbors, team up with my community members, have a group of 10 people and start a business by accessing money in a most convenient way through this. And what this has done is that you have people in the rural areas who have never had any bank account in their lives, who now have what we call the e-wallets with the mobile phones, because the mobile phone penetration is very high. So with this, you have people who don't know what a bank is, have never been to a bank, deep in the rural areas, who are able now to access credit facilities at a very low interest rate thereby leading to them uplifting their lives out of the hard situations that they're facing in the rural areas. Thank you very much.
I just wanted to comment a little bit on what Kevin just brought up. We don't have a product or the scale of Hustler Fund in Rwanda. However, we do have alternatives to it, not at the same scale. Bring out to attention the more cash option that we have. The latest numbers actually highlighted that of the 5.1 million users, actually 4 million users are actively using the more cash. So those are banked and unbanked Rwandans actually all over the country. So the proposals actually of more cash actually are mostly similar to what the Hustler Fund provides, not to the same scale. I would like to highlight that there is a lot to be done, but so for any individual actually that has access to more cash, so you get access to up to 500,000 Rwandan francs. That is quite a lot of money for daily usage actually for your, I would say, ordinary Rwandan out there doing businesses. So up to with an interest rate of 9%, and it gives you actually an ability now to also save money with up to 7% per annum. The loan is for 30 days, and yeah, I think I just wanted to just bring it in. But 500,000 is not that much to promote actually a lot of growth. So we still need more partners and businesses actually to jump in, and so that actually the reach grows further. Thank you.
Good afternoon, everyone. I'm Gertrude Munyana from Goshen Finance. It's a local microfinance from Rwanda. I'm just kind of getting confused because when it comes to developing products in the financial institution, we always get some segmentations for different clusters of our clients, because the clients have different needs, and that is why we do come up with different segments. So when I was thinking about the products we can really offer to the people we are talking about with disability, I was thinking that we should come up with special products with special features for those people. But according to one of the speakers in the House, there is this kind of discrimination. They said that if you come up with a special product for these special people, this is going to be kind of discrimination. So I was just wondering, because what we really follow while developing products, and actually even the government notices that through BDF, they have special offers for women, for disability people. Just because you cannot really offer low interest rates to those people when they are together, like they are in the same categories. Because something here is, when we come with, loans are expensive, yes. So for these special people, we thought that maybe if we get low loans, like low fees or interest rates, then it can be a good offer to them. Or probably another option is group lending, as he said before. But the group lending really needs people who are together, who know each other, and then maybe we cannot be in a place to notice where these people are. So my confusion was, is it that when we develop the products for these special people, is it going to be discrimination or not? If not, then maybe the people in the house who really work close to close with these people could orient us where to find them, listen to them, know their needs, and then we come up with special products for them. Thank you.
Thank you for your comment, your contribution, your input, and also the questions. From the BNR, from the central bank, he gave the suggestion, the comment, and also a question. If I get it well, he asked on the high cost and request us to give a suggestion on this problem of high cost as complaining with the different users of the digital financial services product. On my side, and also from the respondent of different peoples, especially for the mobile money users, they said that. And also, as I'm using the mobile money, I see that cost. When you send the money to the sender, the money charged the cost of transfer, and also the receiver of the money also, the money you send, the receiver will not receive the whole amount as you send. It is also the double charging, sending and receiving money. They suggest to charge on sending or receiving, charge one more time. On my side, as the BNR or central bank as a policymaker of that, you can see if it is feasible for people who use that product, especially mobile money, and also others, like when you are using the internet banking, also there is some charges. When you haven't the bundle on your telephone, you can't do anything on your mobile, on your bank account, especially on your bank account. Without a bundle, or you can't do anything. It is what I expect. Thank you.
Yes, thank you very much, Agnes, for the presentation, and thank you everyone for the insightful contributions. So we don't take them as comments, we take them as contributions because we don't have answers to some of the questions, and the questions are actually the reasons why we are here, so that we can jointly ponder on those to find the way forward. So having said that, the first question by someone from the, by the National Bank of Rwanda has been addressed, I guess, and I'll just add, I think he had another part of the question which talks about existing efforts. For example, I know that since last year, if I'm correct, payments between MTN Mobile Money and Airtel Money became interoperable. That's a very great move, and I think currently the question, the issue which we found out from the interviews with stakeholders is that its popularity needs to be expanded. Some people don't know about it, yet it's a good initiative. So maybe promoting it to many people, especially in the rural areas, will increase its uptake, because people now still think it's expensive to send from MTN Mobile Money to Airtel Money, and yet it became interoperable. So then also we have the Rwanda National Digital Payment System, DPS, which is actually currently being promoted. And I think one of the issues we realized from the interviews is that some financial institutions are still skeptical to join. And I think there is the good thing they are here. Maybe they have some reasons. Some of them are skeptical to join, and yet to have this system really work efficiently, we need financial institutions to embrace it, because it's here for good reasons. So maybe knowing, that's why I mentioned communication between the central bank, the financial institutions, and other stakeholders to bring out the good things in such systems, and therefore encourage those who are supposed to embrace it to embrace, and perhaps to guide on the step-by-step process to comply with the provisions of the system. Those are some of the practical steps to ensure that they join, and therefore to realize the full benefits of this system. And from Equity Bank, so what's the role of researchers and what are we taking from this? So our role as researchers is to present the case. For example, the patterns, the trends, the challenges, opportunities, recommendations. Basically, that's our main role. And another role is to make sure that the findings are understood by the different stakeholders. That's why we are all here, bringing them together to think about the initiatives that can be done. So what is being done and what can be done better. So stakeholders like financial institutions and the central bank and other stakeholders know these issues perhaps even much better than the researchers, because you are in the practical operations. So bring together these stakeholders is our role, and presenting them the case is our role. And then the role of each stakeholder will be to see what can be done. And then you mentioned something to do with, you may do something that you may not necessarily have control over, like developing of products. Some of them are expensive, some of them have cost implications, but that's where partnerships come in, and that's exactly the main reason why we are here, all of us, from different institutions, to see how can we work together. If something requires a public-private partnership, how can we initiate that? How can Equity Bank talk to the National Bank of Rwanda to have a partnership to solve a problem that is beyond the capacity of Equity Bank? Those are some of the discussions we need to happen, and this evidence is the beginning of all of this. And from the University of Rwanda, you mentioned some of the numbers. We can cross-check, but otherwise we got all the numbers from the national payment statistics from the National Bank of Rwanda, and perhaps we can cross-check and see if there is anything that could have been captured differently. We can cross-check that, but that's the source. And so on internet versus USSD payment, I think that can also be seen from the source. But I guess my guess is that that is exclusively internet-based. But I mean, finding out from the source will also, I think, clarify. And commenter number 4. So yes, borrowing a leaf from other institutions, for example, the case of Kenya, as you mentioned. I mean, that's definitely one of the ways to learn what can be done. And I think in the paper we also include some of the cases which Rwanda could learn from Kenya, Malawi, Ghana, and other countries. I think learning always is important, so we put such cases. And I mean, it's nice to have, you gave some examples which can also be taken up, discussed. And the good thing, the stakeholders are here. I think learning starts from here. And then the second last, I guess, is value proposition by different stakeholders. I mean, again, I come back to partnerships. If I know I always find this comment by organizations representing persons with disabilities, that how do you develop products which are special, supposed to serve them, and yet at the same time you don't appear to be discriminating? I think I've had that discussion even in the break with some of the participants in the room, and my solution to that is that we need to work together. No institution is working together. You may think you're solving a problem of a specific group, but have you talked to the group which represents those people? Maybe they have a different approach. They have a different definition of what they call inclusion. So again, it comes back to stakeholder partnerships and collaboration, information and knowledge sharing. And on the issue of, I think it will be the last one. Okay, I think on the issue of low interest rates, group lending, and other related issues related to that, I think I leave that to financial institutions to offer. I think someone was suggesting that, like, how can we explore? What can we do in order to serve? I think this was targeted persons with disabilities, and I think I will not speak for them because they are in the room. I think we have a number of representatives for persons with disabilities. Maybe they can take this question. Thank you so much.
Yeah, thank you, Kasim. We have 2 more questions before we break for lunch or contributions.
Okay, thank you for the good presentation. My speech is going to highlight like a contribution on the side of policy making and design from the Ministry of Finance perspectives. Of course, financial inclusion is very important to alleviate the poverty, and a lot of programs have been designed to for uptaking or lifting some people which are marginalized or left behind in economic perspectives, so including the disability and other peoples. So my question here, did you look how those programs are being helping those people so that their capacities can also influence or fluid to the financial services accesses? Because when those programs are being designed, Jiringa, universal access to education, we need to know their extent to that contribution to those marginalized people, so that otherwise recommendation of designing policies which consider those marginalized people are there. So we need to know if those programs are working to capacitate those people. Another things also I'm going to talk about, referring to my colleague from Goshen. I think designing a product tailored to specific group of people because of the need can't not be seen as a discrimination, rather as a way of lifting them at a certain level so that they can go with other people. So we have also different government institutions, funds of which the bank can collaborate with them. For instance, like BDFs. So to know if those support, those collateral which are missing, that the BDF is granting to our citizens, they include also the disability people. So now, if those people are also included, so I think for the side of the bank, now it's not an issue for tailoring their product according to their capacity. Now, issue of collateral, issue of financial literacies can be resolved through different government initiatives, through the BDF, through other government programs, but also the strategy of which the Ministry of Finance is developing in regard to financial service education. So education is more important, and we are drafting that strategy to educate most of the people on the financial services which is booming in our sector. Another question also that another concern also I need to ask from the researcher, Kasim, did you go deep and deep to know the safetiness of the consumer? So that there is another emerging topic regarding consumer protections, because sometimes even those financial facilities, product that are designed for the customers have some issues. Issues in regard to the safetiness, to the charges, to other things that can harm their financial means, or that the consumer cannot benefit. Rather, the financial services who design that benefit more. Let's say if I make an order, which it can be paid, and then through the networks, through the other issues in the systems, it delays, then I make charges. So do you go hand in hand to know if those issues are also emerging? Otherwise, we are appreciating that the digital financial services are increasing. Of course, we need to be increased again, but also those emerging concepts also should be taken care in other research papers. Thank you.
Thank you very much. One more intervention. Thank you. Part of my question was asked by a BNR representative, and you have answered Madame Agnes and Dr. Kasim, but the answer seems to be partial to me. Why? Because you have said the cost is high. We agree, the cost is high. Because when we see the number of people owning cell phones from the census 2022, average in the country is 78%. In Kigali is about 89.9%, in rural area 73%. Now, a problem of cost on transfer on that platform called mobile, that is high, is a serious issue. Yet in your recommendation, I do not see any recommendation tackling that issue of high cost. From the answer given by Madam Agnes, she said, well, better to charge once. What's the basis of that charging once? I would suggest you researchers to approach service providers, MTN, Airtel Tigo, and dig deeper or understand their side to assess whether real cost is high or not. The question from the BNI representative was, is the cost high? Now approach those people and get input if the cost is high. And what can be the reasonable cost according to you from your research, proposal from respondent? It will help us really to know and to move forward. The second, you have suggested digital financial literacy. Good. That's to get to be literate, you have to be educated. Now, I would like to know what institution or which person is to lead in that exercise of educating people and to make them digital literate. Thank you.
Thank you.
Thank you, Doctor. I have to start from your question. Lastly, you asked on the financial literacy. What we suggest, it's like a campaign for financial institutions to go to the rural areas or and start teaching the group of people there, because they have no access to the internet. Maybe they don't know what is going on in urban area. Maybe they are far from what others enjoying. They are not aware about it. The awareness and the literacy, the solution to that, we are suggesting organizing the campaign to go. They read from the financial institutions, whether microfinance institution, the bank, and also the insurance company they did. Yeah, and also the BNR is the regulator of those institutions. Thank you.
Yes, thank you very much for the additional contributions. Yes, I'll just highlight on some of the remaining issues that haven't been answered. So the first one was from Mena Coffin. So you asked whether we looked at some of the existing programs. In my first presentation, I mentioned, for example, the government guarantee schemes, which are done through the Business Development Fund, BDF, and I mentioned how they are already promoting financial inclusion for some people, especially women and also persons with disabilities. In the paper, there is a section where all those are discussed, and there are also other initiatives like Jira Ubuchuruzi. It's there. Then we also have other programs which are meant to generally empower people. For example, VUP Umrenje program, and I have a recommendation on that in the paper, which is from the organizations of persons with disabilities. For example, some of them believe that the program should look at not disability as a group, but look at persons with the different types of disabilities. If you have, for example, a quota or a target of, let's say, 100 people with disabilities to benefit from VUP, then you can break it down to make sure that it's not entirely taken by persons with physical disabilities, but how do you make sure that persons with psychosocial, mental, vision, other disabilities are also included in that target. So such issues are discussed in the paper. And the comment on designing products that, that serve specific groups of people, in your opinion, you think it's not a form of discrimination. And I'm happy that we have organizations representing persons with disabilities who think it is a form of discrimination. And I've always found sometimes conflicting perceptions and definitions. So the question is, I mean, what is clear is that there is sometimes a communication gap. So if I think if I'm a financial service provider and I think developing a product that serves persons with disabilities is actually helping them, but then they believe you are discriminating against them, then it means there is some break in the communication between me and that person. So the question is, how can we make sure that we have the same definition of inclusion or inclusivity, and that means bringing together organizations of persons with disabilities and the financial service providers to come up with a common definition of inclusion. So what exactly do we do if I shouldn't develop a special product for you? What exactly should I do? Then we'll do initiatives that speak to the approach that these organizations really expect. So communication and partnership becomes very important. I think this workshop is actually the starting point to have this communication happen. And on the comment of going deeper into the analysis to see where issues of consumer protection, yes, definitely. We discussed a lot of issues with stakeholders from government, from other organizations, and issues like cybersecurity, the fear to lose money. Those are some of the reasons why some people are keeping away from mobile money and other forms of digital financial services. And I mean, definitely we looked into those issues, and even there are some recommendations to, for example, strictly implement the anti-money laundering, cybersecurity regulations within financial institutions as some of the solutions which can address those problems. And then there is also a comment, Doctor, from Adventist University. So you asked a question to add to the, what can be done to address the issue of the cost. I think my answer will be partial. The full answer should come from the stakeholders, from the government, and also from financial institutions. But my partial answer would be there are many drivers of the cost. One is the infrastructure, where especially when you look at the rural areas, part of the cost problem is the physical access, especially the low infrastructure. And then the other issue which drives the cost is the limited interoperability, which has started to be proactively addressed by the National Bank of Rwanda and stakeholders, but that's also one of the cost drivers which stakeholders really wished to address. And of course, the others would be just structural, depending on the way the products are priced by the different service providers. And finally, on who should take the lead, well, I think we can't, first of all, we can't say one institution should be taking the lead, but I think, in my opinion, already we have existing programs on literacy. We have the National Financial Education Strategy, which is active. So the question is, who should take the lead? Of course, if we have a policy, the government is already taking the lead. If it brings a policy, that's already taking a lead. And then other stakeholders, financial institutions, should jump in and see what, if the government is proposing to promote financial education and literacy, how do we jump in? How do we develop products that, programs that work with the government to train people, women in informal sector, students in schools, incorporate our programs into the national curriculum? So government starts the initiative, but also stakeholders have to jump in. It has to be a joint effort. Thank you.
I am told there is a participant who want to intervene to complement the, to answer, not to ask.
Thank you. I just wanted to address the confusion. My colleague said it well, that the design of the product, based on the needs, then it can be based on the who you are. Because normally, when we say special groups, special services, sometimes we design product services that are really very expensive and unnecessary. I can use an example of the use of the ramp. Engineer, they feel like they put on the ramp just because this is the law. Yet, we don't need the ramp at the same time stairs, because the ramp can serve all of us. Adding the ramp and the stairs, it's extra cost. It's very expensive in the language of business. This is what people need to understand, which means that when you are designing a specific program, of course you are adding more expenses on your board. If you say like people are special just because they have a disability, they cannot see, they cannot talk, they cannot work. That is, all of us here, we have specific needs. We don't all have same smartphones. For some of us, not all smartphones can maybe accommodate easy banking from Equity Bank. So you are special then. The bank needed to design your special program. It's not. What the bank has to do is making sure that whatever phone you have, you can access the app. Otherwise, the bank is going to design for all of us, because some of us, you cannot even read English. Even some of us, you cannot understand the two concepts, debit and credit. So the bank is going to design for all of us? No. Just think about all those issues. And even when we look at the issues presented for persons with disability, they are common for all of us. It's literacy, it's awareness. It's collateral, it's device, it's attitude, it's accessibility, it's policy. They are common for all of us. What we need is digging into all those issues, and we see, when we say literacy, what are the specific needs for person with a physical disability, for person with hearing impairment, for person with visual impairment? Because sometimes we design what you call special product. By the end, the people you are targeting are not benefiting, just because you make it general. If you put there the program for youth, not all youth, they are lacking collateral. Not all persons with disabilities are lacking collateral. I don't need collateral. That is. But when you put it there in a simple way of general, those go dancers are going to access it fast, because they are the one having information. They are the one closer to the bank. They are the one who have the smartphone. Finally, the people you targeted are not going to access it. It's not confusing. Thank you.
You see? Okay. Very nice contribution. Anyone else with an answer? Not a question? Very nice. Thank you for those contributions. We are taking notes. Let us break for lunch. As you saw on the agenda, we have two more papers, which will be covered after lunch. One will be presented by Kasim on gender, digital financial services, and financial inclusion. And the last one will be presented by Mrs. Rose Bota from One Eco Fund, access to digital financial services and women empowerment. So lunch is being served in the restaurant. You take a lunch coupon or ticket. That lady secretariat will give you the ticket. Then we can resume. When? 1 hour is enough? I think 1 hour is enough. 1 hour is enough. Okay. So let us agree to resume 2:15. 2:15, the presentation will be kicked off. Thank you. Enjoy your lunch. Bon appetit.
Hello, how are you? Yeah, Emile, why am I? Don't you think we need to get more in the I think we should talk to him. Because in DC, Kasim, he wants to talk to.
Oh, okay. I didn't want to pick a microphone again so that they don't quote me again. They've been quoting Eco Bank saying.
Yes, thank you.
Okay. So I didn't want to be quoted again. So
No problem.
I was saying for this aspect of the customer.
Yeah. Yeah.
mwatubwirira abahagaze hanze bakinjira tugatangira bari aho hafi. IT naye mwashyiraho presentation tugatangira. Mutubwirire uwo muntu wo muri kabine yadushyiriyeho projecteur. Ni hafi cyane.
Uburengerazuba.
Ni hafi ni hafi.
Wamenye kamera zisigaye zihari. Cyoko zihishe.
Ntabwo
umenye ko ari ngo
baba baramaze.
Reka
ziri kashe.
Yego, uko buri karere gafite workshop.
Yanjye. Ngo noneho kaje ni mwavuye Musanze. Bara baba
uze kureba muri message.
Urutse Musanze rwose iminsi yashize. Uragenda nkasanga ho buravanwa nkajyane.
Nabonye mwuranye saa 10 n'igice nava kansa 10.
Kandi igihe byakiwe twe parago zitindere gazo yavugira gusase. Tinda.
Petit frère mukoresha stage neza.
Inde. So let's give the floor to Kasim to take us through the third presentation.
Good afternoon once again, and I hope you had a wonderful lunch break. Normally, after lunch is a bit challenging because of the tardiness, and also the temperatures are a bit higher sometimes. But I hope nothing will stop us from having a fruitful discussion. So, we now come back to the aspect of social inclusion. In the morning, I was talking about disability, and then we discussed financial inclusion and digital financial services in general. And now, this afternoon is going to be devoted to gender, where we have two papers, this one and another researcher, Rose, will present another paper on gender. So I'll present some of the issues, but then I'll leave other issues to be discussed in the next paper. So, so this paper looks at what we call the gender divide, or you can call it the difference in access to and usage of both conventional and digital financial services between women and men. And of course, we are trying to see the patterns. We are trying to see the extent to which there is a difference. Is there a difference anyway? That's the starting point. We ask ourselves, is there a difference between men and women in terms of access to and usage of financial services? And the next part of the research is to find out if there is a difference, what is causing the difference? We all know that Rwanda is doing very well when it comes to promoting gender equality across different sectors. And if you have read the latest gender gap report of the World Economic Forum, you'll see that Rwanda is within the first top 10 performers when it comes to gender equality. So the question is, what's happening in the financial sector? Are we having the gender equality we see in other sectors? If not, are there issues? If there are issues, what can be done? That's the main purpose of this study. So I'll talk about a little bit of background, but not so much because some of the issues have been discussed in the previous papers. We shall focus so much on the issues and the takeaways. Those will be the main focus of the presentations, I guess, this afternoon. So without repeating so much of the background, we know financial inclusion is growing globally, but of course, not forgetting that when we are promoting financial inclusion, we think of not leaving anyone behind. Of course, we are trying to make sure that everyone who has the capacity to use financial services does. And if there are issues that limit them from doing so, what is the issue? So as I mentioned, 1.4 billion people have no access to financial services globally. And of course, the numbers are bigger when it comes to developing countries, and of course, particularly Africa. So the question is, what's happening? The challenges vary from one group to another. Those of women are different from those of youth. Those of people in the informal sector are different from those of persons with disabilities. So in this particular presentation, we are looking at what could be keeping women back and what can be done to promote their financial inclusion. So according to the Finscope survey of 2020, financial inclusion reached 93% of adults in Rwanda, having increased from only 48% in 2008. So that's a very big change over a short time period. And the gap between women and men also reduced. For example, it was 4 percentage points in 2016, and currently, when I say current, I mean the latest Finscope, which is 2020, the gap reduced to 1 percentage point. So in some of the presentations I've made, people have asked if the gender gap has reduced from 4 percentage points
to 1 percentage point, then why are you doing the research? Is there a gap anyway? 1 percentage point is just very small. And my answer is, when we talk of a 1 percentage point gap, we are looking at overall inclusion, which is a combination of both formal and and informal services. So when you look at the formal services, the gap is bigger. So therefore, it means that much as the overall gap is just 1 percentage point, we also need to narrow the gap when it comes to formal financial services. So it becomes important still to look at what are the drivers of the gap within the formal financial services. As I mentioned before, there is a number of studies which have done or analyzed the gender gap in financial inclusion globally, but still the evidence working on Africa is quite scanty. And also another gap within the evidence is that there tends to be studies using one approach, sometimes qualitative, sometimes quantitative. But then in order to understand the extent of the gap, you need to do a quantitative approach and also back it up with the qualitative approach to understand the reasons, because numbers will not tell you all the reasons, and you cannot have solutions without knowing the reasons. So having a mixed methods approach using quantitative and also qualitative analysis, we try to contribute to bridging the gap in the evidence that we have on this topic. So I don't think I need to go into this, but as I mentioned, we have a number of good policies in Rwanda. The Financial Sector Development Strategic Plan, we have the National Strategy for Transformation, we have also gender-specific policies housed at the Gender Monitoring Office and other institutions. So we have good policies that guide us when it comes to financial inclusion in general, digital financial services, and also women empowerment and gender equality. So it's just upon us to see how can we leverage these policy frameworks to make financial services in Rwanda more gender inclusive. And as I mentioned, financial inclusion has increased quite tremendously, but still, we need to see some, women accessing and using more of the formal financial services. I'll be presenting some of the differences between men and women in the later slides. So what is the main objective of this paper or this study? One, as I mentioned, is to find out whether there is any gap between men and women when it comes to accessing and using financial services, whether the traditional ones or the digital ones. That's the first one. Is there a gap? Otherwise, if we don't know whether there's a gap, we wouldn't even be discussing whether we need to have issues to close what is not existing. So the second objective is to find out, in case there is a gap, which we are going to find out, if it's there, what is causing it? What are the challenges facing women, and how can they be addressed? Then, I think from the previous discussion on disability, we realized that there are some issues that need really to discuss between stakeholders. For example, some stakeholders wanting to have special products, others saying that's discrimination. I think this might apply to this discussion as well, where some women groups might say we need equal treatment, but how do you have the equal treatment? I think that's why we need interactions between different types of stakeholders within the room and also beyond. So in terms of methodology, the approach is the same as the previous paper. We have three approaches. One, descriptive analysis, where we look at some patterns in terms of some key financial inclusion indicators. We present them separately for women and also for men.
And that will be contributing to the first objective of finding out whether there is a gap between men and women. So we do it descriptively by presenting key indicators from the FinScope survey of 2020 so that we see whether there's a gap or not. And then the second one is regression analysis, where we run multivariate regression models, which we're not presenting for the sake of this workshop. But those who want the technical background, again, as I mentioned before, those ones are there, the equations, the regressions and everything, the models, they're available, but we spare them for, we spare this workshop for that. So we have regression analysis to see what factors influence the adoption and also the usage of, one, products, for example, accounts, and two, the services. And then also we see what factors influence the amount of money transacted. For example, saving, amount of money saved, amount of money borrowed, looking at how that differs between male and female respondents of the FinScope survey of 2020. So we do that using regression analysis. And finally, we go into the discussion to find out what are the drivers of the gender gap, if it is there, that is it there? If it is there, what is the reason? And then what can be done? So that is addressed using a qualitative approach where we reached out to so many stakeholders in government, financial service providers, civil society organizations, including women's groups. I think some of them are actually in here, in this room. So to discuss and find out what exactly can be done so that recommendations that we make from the paper are not just from our observations as researchers, but rather reflecting the realities of the market and also the interests of different stakeholders. So sorry, I think some of the colors you may not easily see, maybe because of the light, but I just wanted to mention, to present one key feature of gender before we move into the actual disaggregated analysis for financial indicators. So education. Education is a very important aspect. There are so many other factors which are important, but I picked this one. Education is very important. And why is it important? There are so many pathways through which education influences financial inclusion. One of them is that education gives you the background to have the overall literacy. Someone mentioned being able to read terms and conditions. I think someone from that corner. Someone needs to know financial management, which is also most times trained through education programs. Someone needs to have digital literacy, which is also a component of education. So education is very important. And if it is important, it means that any difference between any groups in terms of education is already a starting point of creating a wedge in whatever can be done based on that education. For example, in this case, as you can see, women have lower levels of education and compared to men. So what that means is that before even we move into the financial indicators, what that means is that when a financial product is introduced, those who have higher levels of education might have, I say might because it's not straightforward, might have a higher chance to use them because they will understand them better, because the literacy levels are higher, partly resulting from differences in education. So I just wanted to have that in mind. When the discussions start, this will be one of the drivers. Now the question is there a gender gap? Addressing the first objective of the paper, is there a gender gap in financial inclusion in Rwanda? So we picked out some of the indicators of financial inclusion. In this case, we start with access to accounts or ownership of accounts. And I again clarify that if you come across different numbers, the reason is that here we are presenting account ownership of an account which is registered in someone's names, which is different from accessing and using services, including accounts that are owned by someone else. So for example, mobile money ownership, we are talking about having a mobile money account registered in someone's name, not accessing a friend's or a relative's mobile money account. So having said that, we see that women, so the right-hand side of the graph represents women, and the left-hand side represents men. And the bars represent the different types of financial inclusion indicators that we included in this analysis. For example, the first one, which is mobile money, as you can see, the percentage of male adults who have a mobile money account from within the FinScope survey of 2020 was 64%. And if you compare with women, it's 51%. So in simple terms, out of every 100 men, 64 of them will have a mobile money account. But out of the same number, 100 women, only 51 of them will have a mobile money account. So that's already a gap. As I mentioned, the gap in overall inclusion is only 1 percentage point. But now this is formal inclusion, so the gap becomes bigger. And when it comes to bank account, the same, credit card, ATM cards, internet banking, and mobile banking. So those are some of the indicators we chose to present, but of course in the paper we have others. So the first question we see from here is, do we have a gender gap in financial inclusion? Any volunteer? Do we have a gender gap in formal financial access? Someone is saying yes. Kindly put up your arm. Is it a yes or a no? Okay. I would like to hear from both sides. One person saying yes and one person saying no. Please. Yes. Any reason for saying yes?
After analyzing this graph, we saw that the women are not using using the financial inclusive rather than the men. That's why I'm saying that there is a gap in inclusion financial.
Thank you. And someone says there's no difference. Please.
To me, based on what you told us earlier, first of all, let me first excuse myself. This is not my staff. I'm here to learn, but based on what you said earlier, you talked about education. If you look at it within the context of education, I don't think there is a gap, because men naturally, overall, I think, if I'm not mistaken, have higher education. I mean, they are more qualified than women. I mean, statistics are all over. If you looked at the girls and the boys that start school, can I talk, please? If you looked at the statistics of the girls and the boys that start primary to the time they finish high school or university level, you find that actually the boys are many than the girls. And so when you put that into context, you will find that actually there is no gap when you put that education element. But when you look at it generally, you know, the ones who have
education and those who are not having education, you will get such statistics. So to me, given that factor, you know, the education element, the gap is not really.
Okay, yes. Thank you so much. And I always like to hear from, just a moment, I'll give him one chance. I always want to hear from conflicting ideas. Conflicting, I mean different opinions. Someone says there's a gap because they see from the statistics. Another one is saying there's no gap because there are underlying reasons why there are differences in the statistics we see there. And that's where I'm going to start from after hearing from him.
Yes, thank you. Unfortunately, me too, I am proposer, not opposer. So I want to say that the argument is yes. Men are financially well equipped than women for these reasons. The first one we mentioned is education. As you said, the education is the key point to this topic we are talking about. So when you look at Rwandan education, if I remember, there is once Ministry of Education carried out research, showed that in the primary and O-level schools, girls are more than boys. But when you look at A-level and universities, at that level, women reduce. So there are many causes that we cannot analyze now. But the reason that I can say is based on Rwandan culture, beliefs, and myths. There are some jobs normally known that they are for men, not women. There are some lessons that normally known that they are for men, not for women. All those are the reasons that bring this gap between men and women financially. So, but there is a hope when you say, as well as Rwanda is performing good about gender policy, there is a hope that this will change not later than 10 years. Thank you.
Yes, thank you very much for that contribution. It's appreciated. And now, how do we find common ground between the three contributors? Actually, from the three contributors, I can see that there is a gender gap. She's saying there's a gender gap because the statistics show. He's implying that there's a gender gap because there are reasons that are causing it, including education. So your answer is actually the same as hers. And he's also giving the same, there is a gender gap, and he has mentioned the reasons why the gap is there. So we agree that there's a gender gap in financial inclusion. Thank you. So now the question is, what are some of the factors that could influence someone taking up an account, someone using a financial service, for example, saving, borrowing, signing up for private medical insurance? I say private medical because there is public insurance, mutuelle de santé. So what determines the amount of money someone saves or borrows? There are factors. There are so many factors, but I'll be mostly dwelling on gender. So if we look at the factors that influence someone owning an account, for example, bank account to the left, and then mobile money to the right. What are the determinants? What factors? As I mentioned, the reason why we think about factors is always important, not just for regression because you think it's important to add this variable for whatever regression sense it makes, but in a policy sense, and in a policy sense, you need to find out if I need to have an intervention to promote, to boost an outcome, I need to know what are the contributing factors to that outcome. What factors influence that outcome? if it's financial inclusion, if it's access to an account, what factors influence access to an account? And that gives me the starting point to know how to design interventions to promote financial inclusion. And as I explained, the way the graph is interpreted, the zero line, vertical line at 0, shows no effect. In other words, it is like the demarcation, and then the factors which have blue dots to the left reduce the chance of having an account. And someone said, be careful when you say reduce. I don't know whether she's still around. I wanted to add to that. So, yes, be careful as you say it reduces. And I wanted to say, yes, in this case, we are just trying to see associations, patterns, right? So if I see difference between a man and a woman, I report on the difference. But I'm not saying that the man is better or the woman is better. There are reasons which drive that difference, and they can be explained. So factors to the left of that vertical line, red line, reduce the chance of having a bank account and a mobile money account. And factors which have blue dots to the right of that vertical line are enabling factors to account adoption. So as you can see, the main factor I want to mention here is gender, which is the first factor you see on the axis there. So women versus men, or female versus male, that means when the factor is negative, in other words, that blue dot on the left, it means that being female is associated with, I'm now changing the terminology I used in the previous one to avoid saying, how do you say it? Because it makes women worse off. So being female is associated with a lower chance of having a bank account and having a mobile money account. And as you can hear, I'm not committing to any reason. I'm not committing to that being the nature of women. I'm not saying women, I'm not comparing who is better, by the way, men or women. There are reasons why we see that difference, right? So, being women or being a woman, or among women, the level of access to accounts is lower. That's what we see from that. And I think the most interesting part would be to see what exactly is causing that. Without saying women don't want to use financial services, no, we can't say that, because there are reasons which we can discuss. They could be willing, but they could be having constraints which we need to understand so that we design evidence-based interventions. Yes. Then how about amount of money, the value of transactions? So I'm presenting the disability gap, financial inclusion gap by gender, looking at access to accounts. We have access to services, for example, saving, borrowing, and then we have the value of transactions, for example, amount of money saved, amount of money borrowed. I'm not able to present all those in this short presentation, but the paper has all those. Whoever wants to have a copy of the paper, I'm happy to share. So in terms of the amount of money saved, that is the left, you see still gender, whereby women versus men, you see that the effect is negative. As I mentioned, having a dot to the left of the vertical line, that means negative. In other words, being female reduces the chance that someone will, it reduces the amount of money saved compared to being male. Or in other words, overall, the amount of money saved by women is lower than the amount of money saved by men. And I'm not saying any reasons at this point. It's just the way it is. I will not talk about other factors because I already mentioned education is very important. As you can see, there's a consistently positive effect of education. In other words, those who have lower primary have higher education. You see the factor is to the left, to the right of the vertical line, and that is compared to those without B. Person A has lower primary, person B has no education. Considering all other factors constant, then we assume, what we see is that the person A who has higher education, lower primary education, has a higher chance, saves a lot more than someone who has no education. And the same applies to those who have upper primary, lower secondary, upper secondary, and then tertiary and university, compared to those without formal education. So the higher you go, the higher the chance of, the higher the amount of money saved. Of course, other factors constant. And the same applies to amount of money borrowed. Still, we see that women borrow less. I think I don't remember who mentioned that before. Women tend to borrow, but they borrow less. Okay, so that's what we see. So the question on whether there is a gender gap in financial inclusion, and as you can see, I'm presenting only formal financial services. I should be clear on that. I'm not talking about Imimina. I'm not talking about the Twantwans. I'm talking about formal services. Exactly. So those ones are also there, but I'm specifically focusing on the formal financial services. That's where we see a bigger gap. So now the question is, and I think this is the most interesting part, which is the starting point to developing the interventions. So the drivers of the gap. Why is it that women save less? Why is that women borrow less? Is it that they fear collecting more money from the bank? I don't know. I have no answer to that. I'm just wondering. So what exactly is the reason? So we have several factors, some of which came from the data, some of which came from stakeholder interviews. The first one is literacy. Women generally have lower levels of literacy, and I hope to hear from the participants during the discussion. Some of you might disagree with some of the statements you see here, which will be interesting to have an insightful discussion. But what we see here is that women generally have lower levels of literacy, overall literacy. And that also applies to financial literacy and digital literacy. Now for the financial literacy and digital literacy, there could be different reasons also for that. But generally you can see that, as I presented before, women have lower levels of education. And education is very important for literacy. So generally, having lower levels of education definitely means having lower levels of literacy. And we confirmed that also from the stakeholder consultations. Then, what does it mean if a woman has lower levels of financial and digital literacy? Of course, if a new product comes up, the speed with which someone adopts it depends on how much they understand it. And terms and conditions, documentations, the information about the products sometimes requires some level of literacy, which favors those who have higher levels of literacy relative to those who have lower levels of literacy. In this case, in favor of men as compared to women. So lower levels of literacy contribute towards the gender gap in financial inclusion. And not forgetting the issue of collateral. I think financial institutions in the room agree that collateral, I think, should be one of the main foundations for formal credit. If I want a loan, if I walked into bank A today and I want a loan, the first thing would be, how can we recover the money? Either I have a salary. If I don't have a salary, I must have, if I'm a village person from having some land somewhere, I have no salary, then they will ask me whether I have a land title. What if I don't have any of those? So collateral is a big problem. And women tend to have lower access to collateral, for example, buildings, land titles, and other. When it comes to access to formal credit, that becomes one of the stumbling blocks to women accessing formal credit. In terms of just accessing, that is the propensity, but also in terms of amount. Let's say there is a chance to get some credit without collateral, but then there will be a limit to how much you can get without collateral. So cultural barriers is very, very big. It's a very big issue. And it applies to traditional and also digital financial services. For traditional, let me start from the traditional services, just simply having an account. Some of us might disagree. Sometimes women require permission from their husbands to have an account. True or false? True. I can hear some true. I also heard some false. But I mean, it's possible anyway. It happens, and we have come across these during the discussions. Sometimes women need permission. So if I'm a woman who wants to have a bank account, and I need to ask whether it's my father or husband or whoever, that already limits the financial independence. I can't make a financial decision to open an account. And if I want to have some money as a woman, secret money if I can call it, and I need to inform someone else, then I would rather avoid the bank account. Isn't it? Makes sense. So such cultural issues. And then coming to, even it's possible, sometimes a woman opens an account and then the husband has to operate the account, the password and everything. So those are serious issues. That cultural domination, the male domination, is a very, very constraining factor for women. And I know some women who prefer to save money with their fellow women somewhere who have more independence. That laughter means a lot. It's possible. And when it comes to digital financial services, to have a mobile phone, sometimes, I mean, we know that more men have mobile phones than women. That's a fact from statistics. And if you have a computer at home, a home with, let's say, 10 boys and, let's say, 2 girls, you can count how many times the girls will access the computer when there are 10 boys in the house. So men tend to dominate the opportunities that women are supposed to use. Exactly. Already they are limited opportunities and they are dominated. So that creates already a gap when it comes to digital financial services like mobile money, mobile banking, internet banking, and others. So those are, we can talk about so many of such cultural issues, but that's one of the barriers. And then products. Someone might disagree here. Do we need products that serve women? Well, so stakeholders believe that some products in the financial sector don't represent the interests of women. Talk about women in the informal sector who have irregular salaries. How can they have accounts, loan products, which favor them? So those are some of the issues which some stakeholders reported as having limiting them from using financial services. And then awareness. So I remember when someone was talking about the issue of awareness, someone said women are always, of course not always, but maybe sometimes, but someone said women are always locked up in their houses. So how do you expect them to be exposed to the financial sector? She's always in the kitchen, from the kitchen to the sitting room, and always overburdened with a lot of household chores. So when will they be exposed? When will they know that there is a credit card? When will they know that now mobile money can be used to pay school fees? So those issues, the exposure, So it sounds like something small, but to them, when they're discussing this, you find that there are very, very key issues that limit them from using financial services. The exposure, the awareness. And the list is bigger. In the report, the list is bigger, but I just picked some of them. And I now go to the last one. What can be done? Always the hardest part is what can be done. And I can share my story. When I was discussing with stakeholders, sometimes there is a blame game. This stakeholder category is supposed to do A, B, C, D. Others are saying, no, this one is supposed to do this. This one is supposed to do this. So the question is, something has to be done anyway. So how do we do it? So when we present the recommendations, which are from the evidence, we are actually stimulating discussion and facilitating partnerships. Without saying financial institutions are the ones responsible for developing products. Yes, they are, of course. But they might need some collaboration, facilitation, partnerships. So we just present and see whether we can have some synergies among stakeholders. So for the part of policymakers, we need, when I say we need, I'm presenting recommendations from stakeholders. I'm not presenting Kasim's recommendation. So what is needed is to have gender mainstreaming within the different policies. And what some stakeholders recommended is that if there is, for example, the financial sector development strategic plan, how can we make sure that there are interventions that are specifically targeted to promoting financial inclusion for women? If you talk of digital, the share of electronic payments as a percentage of GDP, which has a target of 80% by 2024, according to the National Strategy for Transformation, NST1. So how can we make sure that we have a target for women so that we track both male and female progress in terms of key indicators? So all other policies, how can we make sure that we mainstream gender in those policies? If we empower women, how do we make sure that we have specific interventions that help these people to access and use financial services? If it's the National Employment Policy, which was revised recently, how do we make sure that there are specific programs that address access to finance for women as a way of promoting self-employment, which is part of the National Employment Policy? Those are just some examples. There are so many policies which we can talk about. How can we mainstream them regarding gender? And also, of course, how can we implement what has been mainstreamed? And how about the programs, digital literacy programs, financial literacy programs? Someone asked, who should take the lead, right? So who should take the lead? The thing is, as I mentioned, the government has the financial education strategy. Already that's the lead. But then, the government is not going to do everything. Financial institutions are supposed to contribute to that strategy. They're supposed to come up with the programs, and of course, where needed, they're supposed to reach out to different stakeholders which can support in whatever programs are being designed. So if you have a literacy program that is targeting women in the informal sector, and then you say, okay, I have an idea, but then it will be costly for me to deliver this program. Then the question is, before you give up, have you knocked on the door of at least one or two development partners? So that's the kind of collaboration and partnership that can move action when it comes to implementing some of these recommendations. So when I say who is responsible, I'm just indicating, but otherwise it has to be shared responsibility. And then I talk about partnerships. Partnerships are very important. If you talk of developing products that are friendly to women. That's a broad recommendation. And if you can try to break it down, for example, if you talk of collateral-free credit, you're not going to tell a financial institution to give credit without collateral. Maybe some of them will under their corporate social responsibility, maybe. But then the question is, what is the cost? What is the benefit? So that now if collateral is a problem, and some woman somewhere in the rural area wants just, let's say, 500,000 to start a micro business. So how can you work, for example, how can you approach the Business Development Fund to get a government guarantee scheme for such people? So such partnerships are needed. The government has initiatives already, some of them are available, but how can others also contribute to those initiatives? So partnership is very important. And also infrastructure. As I mentioned, in rural areas, there will be a paper on women in rural areas, which will be presented next. So infrastructure becomes a big problem for everyone. And of course, being a woman, it even adds to the problem. So joint ventures between the government, financial institutions, development partners to promote or reinvigorate the infrastructure, especially in rural areas, can improve service delivery and induce people to use financial services. And also someone mentioned that if, when I say someone mentioned, I'm trying to emphasize that these recommendations are from stakeholders. So someone mentioned that there are many programs available, and what we need is to have a central body coordinating all of them to avoid duplication. And someone gave an example of the Gender Monitoring Office could be designated as a central body to know whatever intervention the different stakeholders are doing to promote financial inclusion for women, so that we can easily identify what is being done so that others don't duplicate the same, and also easily assess where the gap is, where other contributors can focus. And lastly, gender disaggregated data. Now we have a lot of gender disaggregated data, but some institutions don't have access. I think even in this room, I think there are some people who didn't have the specific numbers when it comes to financial inclusion, like ownership of an account between men and women. So without that information, it becomes difficult to understand that there's a gap. It becomes difficult to understand that there's need to close the gap, and it becomes difficult to understand how to close it without evidence. And I think that is the part of the government, but of course, as I mentioned, other stakeholders need to support. And then finally, for financial institutions, mainly they need to develop products that are really sensitive to the needs of women in different categories: informal sector, young women, the youth. How do you develop products? You need to do data analytics, as I mentioned. How can data analytics is very important, and as I mentioned, I'm trying to design a program which can build the capacity of financial institutions to do data analytics so that they can understand the patterns. If I'm a financial institution and I think lending to a woman is risky, maybe I'm speaking from my own perspective, but I might go ahead and do some research to see repayment rates, default rates. I might actually be proven wrong to find that women have higher rates of repayment compared to men. That changes my attitude, definitely. So I'm still designing such a program to see if capacity building can be done for financial institutions in data analytics. And then awareness. How can awareness be promoted? This is mainly the responsibility of financial institutions. So if I have a product, how do I make sure that it's known by women in urban, rural, and also different age groups? So sensitization is very important, not only to tell people that there is this product, because if I know there's mobile money, so what? What will induce me to use mobile money is what someone mentioned, the value proposition. What do I stand to benefit by using mobile money? How do I benefit? By leaving what I've been used to, saving money under my pillow, why should I put it on my mobile money account? So that sensitization is important. If there are several products by financial institutions, how do they make sure that people know them? And also how do they make sure that people know how they work? And also the benefits are well explained so that the value proposition for these people is very clear. And then finally, investing in research and development, that is also in addition to the data analytics. If you want to develop a product, sometimes you need to work with fintechs, other stakeholders, and you need some bit of investment in research and development. Of course, that's a commitment, a financial commitment, a huge one. But then as I mentioned, if you need to make it happen, then you can also seek partnership with other stakeholders, government, development partners, and others. So basically, those are some of the recommendations that people gave which can reduce the gender gap in formal financial inclusion. And with that, thank you so much, and I welcome questions. Thanks a lot.
Comments, questions?
Thank you so much. Thank you for the presentation. I would like to come back to your to the challenges. If you can go back to the challenges presented. Excuse me. Yes. Yes. On the 5 challenges, you are totally right. I'm going to explain myself because I had some misunderstanding in regards to the differentiation or to design a tailored value proposition to a given segment. On the financial literacy, I agree with you. We need really synergy in this as far as knowledge and financial literacy is concerned. Because as financial institution, actually we are doing it because we have the responsibility on the advisory services in terms of product when the customers are approaching us. So this one is not even for women only. It's both men and women. It's only that women have the higher rate than men, but we are doing it. But there is still a big room for improvement. That's where we are calling all the stakeholders to work together so that we can improve on this side. On collateral issue, it's really a challenge. At least I'm dealing with women, I'm supporting women, I'm supporting the women empowerment. And this is really a big challenge. Talking about the culture, men are still thinking that women are not really in a position to do a business. Here I'm talking about women in business, not women professionals. Actually, we need to differentiate those two because the challenges faced by women in business are different from the challenges faced by women in rural areas, women farmers, women micro traders. They are very different because women professionals, it's easy for her to get a mortgage loan. As far as that mortgage will stand as a collateral. She can use her salary to get a personal loan that she can use for different needs, which is different from those in business. So when we present also challenges, we need to counter that, to separate those two because the challenges are not the same. So the collateral is really a challenge for women in rural areas, women in business, to access loans or to access finance because of that challenge. And as far as partnerships are concerned, we also approach different partners like BDF, like IFDB, African Development Bank, under AFAWA. They have a particular product for women to cover their loans. as well as BDF has that segment of women and youth. At least we have those ones who are really fighting with us so that we can push the women financial inclusion. So the culture one, we can perceive it in a different way, but culture is really playing a role, a big role as a barrier for the women financial inclusion, because we still have that perception that women cannot perform this or this. Women are meant to be occupied by household activities. They need to take care of the children, and those development activities or economic activities are not really for them. They can do it as a pastime, but it's not for them. So this one also hinder them to be considered in different activities, but also by themselves. They still, some of them, we are still struggling to educate them to change their mindset, to understand that they also can create a business, they can do something that can produce or can help the family to grow. So it's also a call for every stakeholder here in this room so that we can work hand in hand and alleviate on that. On the product, I'm emphasizing on this one because it has been a discussion in this room that we shouldn't have products specific to this particular group because it's discrimination. I'm not on that view, because if we can say about what the unpaid care work, if I can give that example, that time concentrated to economic activities for a woman is different from the time a man can concentrate on different development activities. As in, if we have 8 hours in a day, you can count that a woman will go to fetch water, go to look for firewood, go to cook for the children, go to look for the kids, if they ate, if they were taken care of. And men are just on their work, while women are splitting their time in different activities. So if we need to have product to support women to grow, for example, if I can say Maji loan, it's a product, and it will benefit more the woman rather than men, because if I can create a system that can provide water easily instead of going to fetch water far from home, that time will be concentrated on another activity that can generate income. If I can provide a facility like cooking stoves, I create a product that can provide cooking stoves to women. If I can create a product that can, for example, the solar, she can like have time to do those home activities in the night, while during the day she's working or she's doing productive activities. It will also help. That's why I'm saying specific products are really needed so that we can alleviate on that burden of unpaid care work. And another thing, still on the product, like myself, Nadine, if I get, I give birth, for example, I have 3 months of rest, taking care of my kid. My salary is coming on a monthly basis. If I have a loan, they will still take the loan repayment from my salary because I'm getting paid every month anyway. I'm still at home and I'm getting my salary. But that woman in business will not get that privilege. She can't get a maternity leave. If she has a loan, she will not explain to me that I gave birth, now I'm not paying the loan because I don't have time to go and sell my potatoes or my tomatoes. You need to pay me anyway. No, whatever situation you are in, you took a loan, you need to pay me. We are not considering that period that woman is not at work because she's like me, that what she's going through is like me, Nadine. Why not her not getting that privilege to get a maternity leave? So it's another product that can be can help her to overcome that situation, because she may be a defaulter, not because she's a defaulter, but the situation made her to be that way. So having that product, actually Equity, we have that product, now we can pay the maternity leave for the women in business. So such kind of product are needed, such kind of initiative are needed so that we can support women to develop activities that can generate income and perform well like men. Thank you so much.
Thank you very much. Actually, I want to make a small comment on the first point, low rates of financial and digital literacy among women relative to men, right? So I have a small issue. Do you think the financial and digital literacy, one of the key factors which actually create this problem is unequal access to education? And if yes, unequal access to education, what is the problem? And this problem should be much more addressed so that the first comment which actually shows that this difference in literacy, financial literacy, can actually solve the problem. So the question is, do you think unequal access to education can be one of the factors that create this problem?
Good evening once again, ladies and gentlemen. I just have two comments. First of all is on what we're specifically talking about, and I have a suggestion, especially just once again borrowing a leaf from Kenya, is that there's a very innovative and results-driven product called the Women Enterprise Fund. Now it targets individual women and also women in groups. So for example, the individual women are able to borrow up to the tunes of 100,000 Kenya shillings, which equates to slightly over 1 million Rwandan francs, with a very little interest rate of 6% per annum on a reducing balance. And again, this is informed not from any documentation that is needed by the women, but the woman who has a karasharame phone in the rural areas can just use a USSD code and access these funds. All right, there is no collateral needed, there is nothing needed. You don't need to see any bank officer, you don't need to go to agency banking. All you just need to be using is your phone. You don't even need to be having internet. As long as you're just making calls and sending some SMSs, you can be able to access this particular Women Enterprise Fund. The other one is within the group level. So here you're looking amounts all the way to over 12 million Rwandan francs that are given to women in groups of 10. And what enables this to work is the collaboration with government. So government has increased an allocation from 4.5 billion Kenya shillings to 13.5 billion Kenya shillings, which is quite huge, that goes towards this fund. So this fund is a revolving credit, which is budgeted within the government allocation, and then now the work with the private sector, that is the telecoms and the banks, to enable now this to be able to reach there, right? So pushing more and ensuring that the women are included in that access to digital financing in the most efficient, transparent, cost-effective way possible, right? The second comment is in regards to digital literacy and education. I think a suggestion would be right from primary school within Rwanda. I believe in terms of the curriculum and the exposure to digital information should start from a very young age. One thing that I'd like to commend is the Rwanda Coding Academy. It's in Nyabihu. So there you have the top talent
students within Rwanda who get a chance and exposure to advanced digital financial literacy, if it's coding, if it's software engineering, at a very young age, which is very commendable. But now a step needs to be taken backwards, and a deliberate curriculum through the Ministry of Education needs to be put in place, so that right from primary, even nursery, there's some form of exposure to digital literacy, even in the rural areas. Again, also, there needs to be a deliberate move also by the parents within the households as well, to just encourage this digital literacy. Because I think a key thing that hinders a lot of the women from being involved in that space is that someone thinks, I just need to have a smartphone. So for me to be able to access more services or do anything, I just need to have an expensive smartphone, all right? Which now makes them think that, all right, this is not for me. I will only get access to that when I'm in university because I'll have a smartphone. But just with a small features phone, they can be able to have exposure and access to this and access different digital services within the small features phone. But that starts through the education, not to the parents in the households, giving their children exposure to this. Thank you.
Thank you very much. Good afternoon. I am Mutawaruka from Afrinet, also a member of EPRN. I think I have an issue concerning the findings of this research, especially from the statement made about women not having collaterals. I think programs, research done about women have taken some time. I think taken some time from the context, I can even say the ecosystem of the women. Because they're talking about a Rwandan woman in a Rwandan household. For example, on the collateral, I think women have 50% of collaterals, which are mostly used the land and the house, so that they have access and even power on these collaterals in the household, if we are talking about women in the household, and they have even power in decision making. I think if we talk about women, let us take them in their context in the household, because we don't know how decision is made in the houses, and every household is special. Decision making, especially about money, is special. Sometimes decision making is apparently outside, taken to women, are seem to be taken by women, but sometimes are instigated or instilled by women. So for me, probably it is an issue for debate, but ignoring that women have power in their household, ignoring the culture, sometimes push government, decision-making researchers to have even biased data. So this is my consideration. Probably it is an issue for debate. I don't know the researcher. The researcher has to do to tell us about this concern for me.
Thank you very much. Thank you very much, Dr. Kasim. Is that correct? Okay, I'm going to ask you a few questions, and not to take much of your time, I'm going to read what I wrote, and maybe even my comments will be read. Otherwise, that was a very brilliant presentation. Thank you. One, what factor accounts the highest in undermining women's inclusion in financial services? Can I go on? Is it okay? Okay. Did you consider the levels of poverty among women as a factor that undermines women's inclusion in the financial services? Because honestly speaking, women are very poor compared to men here. And I didn't write this, but it's coming in me. Did you consider the fact that I think the makeup, the women, the way they are made and the way men are made, because we live in a world that basically demands that you fight. You just go for it. So did you consider such factors? I don't know whether we can place that under the cultural barriers. Because, you know, the way I read that, cultural barriers and prejudice among financial institutions, I get somehow lost. I'm like, is it cultural barriers as far as financial institutions is concerned, or what? Is it societal barriers, you know, cultural barriers? Because I think that is also a very important factor to consider. The way women are made up, or, you know, it's not the way men are made up. And therefore, men, in my view, are more likely to go for it and, you know, like engage in such ventures than women. Then, those drivers of a gender divide in financial inclusion and digital financial services, I'm wondering, where is education among the factors you researched on? Because when you talk of literacy, I would have loved maybe to see education under that, but the way it is stated there, it has to do with, you know, financial and digital literacy, not really this mainstream education. So to me, that is also one factor that you should consider. But you can answer. Let me put it, maybe maintain it as a question. Then you mentioned that recommendations that you actually presented came from stakeholders. But I think I want to assume, I believe that you guys are experts. Isn't it possible that you people can look at what you researched on, and as experts, you based on that, you know, to come up with expert assessment and observation, and then you come up with recommendations based on what you are given? Because them are not experts, you are the experts. And finally, I think this is a request. Maybe let me put it as a request to you stakeholders. I have seen, I think, so many banks around and other financial institutions, and of course maybe government. Why don't you work together synergetically? And because I believe your efforts, I want to believe that your efforts are scattered. You're doing a lot of good things, but you're scattered and you're not working together as a team. If you can create that, I think someone mentioned about that coordinative effort. You need to have that. You need really to make sure that you really don't waste. Because once you do not work as a team, collaboratively and collectively, synergetically, you are not really going to make it. You know, the women will still have a couple of years to catch up. Thank you very much.
Thank you. I'm Josephine Murerwa from the Development Bank of Rwanda. I'm in charge of knowledge management and technical assistance. Thank you for the presentation. I would like to come back to the recommendations, which I suppose are most generic, and it's difficult to get the buy-in from representative of different institutions. Given that you have made more research around the gender finance, can we ask you if it is still under the scope of work in your terms of reference to present us maybe in the near future some concrete gender finance models that have been developed in other development countries, developing countries, so that we can get the idea of what is working, what we can customize in our business models in the respective banks and the microfinance institution. Because that could help us. We can think about a service, a product, but if we have an information of something which has worked in other similar area as our Rwandan context, this will work, will help us to develop also those services or products in our respective banks. Thank you.
Thank you so much, presenters. I'm Justin from Kevina till Kevina. I want to talk about two things. One is a reflection to the financial institutions and other service providers. Following the drivers of gender divide in financial inclusion, one of them is lack of financial products tailored to the financial needs of women. I think this is very critical, depending on the categorization of levels of women. We have women in business, we have women who are employed in formal sector, and we have other women in rural areas. Basically, the needs will never meet. Why? When you look at a woman in the far remote area there, the loan she might need, in most cases, is for social issues or domestic. And it ranges from 30 to 50. This is a reflection. I'm giving it as a reflection to financial institutions. And to my understanding, I don't think so far we have these opportunities that would serve these women. So it's a reflection for us, financial institutions and other service providers engaged into financial needs of women, to look it into and see how they can tailor different financial products, or if they can even suggest other ways that could serve women better. Two, I want to comment on one of the comments from my colleague who talked about the correlato requirement, and he's not seeing as an issue. The power dynamics, Rwanda is still a patriarchal society, regardless of the good laws and policies we have. Following our inheritance law or the succession law, the regimes we signed for determines how I can get a loan using a collateral. If my husband doesn't sign for me, automatically that 50% means zero. Doesn't apply. And I will not get this loan. Power dynamics is very key in this case. And it's seen as a big challenge in Rwanda regardless of the good laws and policies we have. If we can talk about policies and laws, then we would be number one. But practicability, we should think about this. How do we address these issues? How do we address the gender norms? How do we address this patriarchal society is continuing to limit everything to move? Thank you so much.
Yeah, thank you very much, presenters, for good research results. My concern is about, yes, the findings of the research. Yes, it's very good and it looks very nice. I was thinking of how the results are presented. It could be better to show or to categorize the respondent into their categories. For women or men, as you know, a big number of population in Rwanda is youth. There, by saying that women, it is generalization aspect. It could be better to categorize women in their category. If are youth, youth women and the adult, so it will help us to know who are the active than others, and when we are developing the interventions, we could really focusing more on intervention depending on the category of people. I don't know if in the body or the scope of their work there is a categorization of people depending on their age category. If not, the findings could always just bring more concerns about people to think what kind of intervention that we could develop depending on the needs and the assistance. Thank you very much.
So thank you very much, everyone. So the kind of responses we have means we all agree that it's an important issue to discuss. Otherwise, we wouldn't be having several contributions. So some of the questions, I will not have an answer to some, and I will throw some of the questions back to some of the different categories of stakeholders in the room. So, but let me start with the ones that I have an answer for. So on the, I think someone from Equity Bank, Nadine, most of them were additions, call upon stakeholders, how to improve gender equality, collateral issues. I think I just noted some of the issues you mentioned, and they can be incorporated. And there is an issue you mentioned of the challenges of women. For example, the farmers differ from the challenges of women in business, women in employment, formal employment, and that's very true. The issues are different, and I think someone else also mentioned the same. And then the question is, how do we make sure that we understand? When I say we, I mean everyone, without saying financial institutions, but everyone. How do we make sure that we understand these differences? It's good that they have been mentioned by someone from a financial institution, but how do we make sure that all financial institutions and all other stakeholders understand that the needs of these women are different? And I think that actually becomes the basis of developing products, which someone mentioned, that address the needs of these people. And I think someone said, we don't need products that address the needs of a particular category. But then my suggestion here is that if you know some of the challenges that face women, maybe some of them could be similar to the challenges that face youth. So how do you make sure that you address an issue whether thinking about women or youth, but how do you make sure that the constraints that deter people from using your services can be addressed? That's the main thing. We are not necessarily looking at products that are colored pink, but we are looking at products that address the barriers that limit people from using some financial products and services, whether women, youth, or other categories of people. How do we solve problems? How do we make services more inclusive? And I think I leave the discussion, the discussion can still go on, whether products can be made addressing specific people, whether we just need to come up with general products that address either low-income earners, where some women will be part, where some youths will be part. But the question is, how do we find a solution? If there is a problem, how do we find a solution? And I think developing products that address specific needs for not only women, but all people who have issues using certain financial services, that would be the discussion. just like there is competition and a new product comes up, another financial institution takes it up. So there should be ongoing innovation. That's why I mentioned research, development, data analytics, to try to always understand the dynamics in the market, the different customer segments, and therefore be able to develop. So use a customer-centric approach to develop products. And there is also yes. So I think I think I just have a recommendation on that, because the next question I was going to respond to was also on products. So I think the issue of products becomes very critical, as someone mentioned, and my suggestion here would be, if there are products that are not well adopted by women, there are reasons. Perhaps there are other products that could address the women's needs that are not offered by financial institutions. And what can be done to get out of the dilemma would be to have a comprehensive mapping of the needs of the different types of or categories of women, and hear from them what types of products could address their needs. And I think this also starts from the financial institutions. Sometimes there is a perception that the products don't serve women's needs. I say a perception, because sometimes you find, if I'm a woman and I think, let's say, credit cards are meant for men, that's my perception, and I have a right to a perception. So I'll tend to say, well, the bank has no digital platform for women because I can't use a credit card. But the question is, has the financial institution tried to tell me as a woman that I can use a credit card, and how I can do that? So part of the issue is actually from the sensitization and the awareness. And I think this is where financial institutions need to do a big job in making the available services popular among the people. And there's another comment who said, do I think the unequal access is, unequal access to education is one of the factors? Yes, I think unequal access to education is one of the factors, and it has an indirect effect which I explained at the beginning. One of the indirect effects is literacy. It influences literacy, and literacy in so many ways. The overall literacy, being able to interpret terms and conditions, being able to read, whether English, Kinyarwanda, or French, whatever it is, and also the digital literacy. So it's a combination of issues. And we used education just as a proxy for that, for all those. But otherwise, definitely, illiteracy itself is a direct contributor to the gap. And impliedly, education, which influences the literacy levels. And so to answer the question in brief, yes, education is one of the key issues. And of course, the associated literacy are the specific drivers. And there were some suggestions. I think most of these were suggestions from Kenya, what we can learn, some kind of benchmarking, the digital credit and other innovative products. So those are suggestions which could actually be taken up. I could write up some of those in the paper to have lessons learned from the region and what can be done by financial institutions in Rwanda. Thank you for those contributions. And then someone from Afrinet. Yes, there is a claim, I'm not sure how true it is or the source, that women have an estimate of 50% of the collateral requirements. Okay, assuming it's true, I'm not so sure because I don't know the source, but assuming it's true, then the question is, so it's like from the question, then why, the question is why do we then think collateral becomes an issue? So maybe one thing I didn't get is that if women have 50% of the collateral that is needed, how about men? Maybe more, right? So we don't know. But that's not the main issue. The main issue is women should be able, let's say they have the 50% collateral, but they should be able not just to have the collateral, but to actually transform that collateral into something meaningful. So can they present the title to the bank and get a loan? Someone mentioned that you have a title where you're written on with your husband, but to get a loan, your husband has to sign. So what if your husband doesn't sign? That's an issue. So that means you have virtual collateral. It's not practical, right? So it has, I mean, it goes just beyond having the collateral, but being able to transform that collateral into capacity to obtain credit. That's exactly what we think about. And it has something to do with breaking cultural barriers. There is an organization, I'm not trying to market any organization, but there's an organization which has an approach which I liked. It's called RAMREC. I don't remember in full, but it's called RAMREC. So it works, instead of working with women to empower them, it works with men specifically as agents of change. So if I have a title where I'm the owner with my wife, so how do we make sure that we use the title for credit? By the way, there's a possibility of getting using the title for credit, but then how do we use the credit? Let's say I own a business and my wife owns a business. If we use the title to get credit, in whose business do we invest the money? Maybe mine, right? So those are the cultural issues we're talking about. And working with men as well as agents of change is one of the approaches that I like about such organizations like RAMREC. And there's also a comment on whether I considered it natural. I don't know whether I captured it well, but whether I considered natural differences between men and women. Well, we all understand that there is a difference. I mean, there are differences between men and women, naturally, and I don't think that would be that's the main part of the main reason for the. I mean, it's not the main focus of the paper, because what we are saying is we need to make sure that women as they are, without looking at the differences naturally, but women as they are, can be able to effectively use financial services. We're not trying to say women should use financial services the same way men do, but how can they use financial services in ways that are better suited to the way they are naturally? I think that's the main reason, the main difference between what we did and what's being suggested. And definitely the recommendations, the challenges are exactly trying to portray the fact that women are different from men, but which is not the main focus. The focus is to see how can we promote women the way they are to use financial services. And
for online participants.
You are talking about women, but this is about gender. You just help me to understand this. Even the participants here are talking of women, but this is a gender thing. It's not necessarily that gender equals women, you know. So you need, can you help us? Thank you.
So sorry, me. True. So I'll be happy to clarify. Thanks a lot for that contribution. I'll be happy to clarify on that. I agree with you. Gender is not women, of course. Gender is not women. And we are not trying to say we should really drop serving men and replace them with women in the financial portfolios of financial institutions and in all the policies. But the reason why, that's why I presented this last part after the quantitative part, having answered the first question, is there a gender gap? And we found that the gender gap was there. Now the gender gap was favoring who? From what I presented. The gender gap was in favor of men at the expense of women. And to make the financial sector inclusive, you have to make sure that you don't leave anyone behind. So if someone, let's say, if you have, I'll use an example of VUP program. So the question is, why don't we make VUP for everyone? Or why don't we make it for the top 10 income earners? It's because we want to uplift the ones who are at the bottom. So the same applies to women. We are trying to make sure that whoever is left behind currently can be promoted so that we bridge the gap between that one who is left behind and the one who is at the top. That's the main reason. But otherwise,
I don't, because if you really leave out the men, you need to directly respond to the issues that actually allow or emerge the men, right, to access such financial services, and not the men, rather the women. So you need to, I don't know how I can put it, but you need to head-on address those factors, not necessarily working with.
My name is Edward Ruzindana from the University of Rwanda. I just want to support the presenter. We have realized that there is a gap. There is no debate about that. And this gap in accessing financial institutions is favoring the men. We have agreed that. And this gap puts the women at a disadvantage in accessing financial institutions. That's why this EPRN is trying to address that issue. Intervention programs, intervention policies, so that the women can go, he mentioned it, and even experts in management and developmental studies, they say that you cannot realize the development if one sector of the community is left behind. That is his line of argument. How do you call this? This research. That's what his research is focusing on. So that in Kinyarwanda, tujanemo. In Kinyarwanda, so that this I don't want to use. I wanted to ask him personally. I wanted to ask him, like, that should we put women as people with special needs in as far as but I was conscious, so in the morning he was attacked and I feared to bring it in, yes, but sincerely we don't, there is no need to debate about it. And this is, as I said, experts in developmental studies, they say you cannot realize meaningful development if one sector of the community is left behind. That is his line of argument. Thank you. That's my point of support, sir.
Thank you so much for that contribution. I appreciate. And just to add to that, to wrap it up, if we have women and men in a race, what we are saying, we are not saying that we should cut off the legs of men so that women can catch up with them. What we are saying, we should strengthen the legs of the women so that they can catch up with the men. You understand? The equity, exactly. Thank you. Some few remaining. Yes, so I have some few unanswered. There's a comment. There's a comment from Josephine from BRD. So, yes, you mentioned whether we can present some concrete gender financing models. So, I can say that would be beyond the scope of the studies that have been presented, but it's something that we can do to do some kind of mapping and benchmarking to have some models that can fit within the context of Rwanda, and we would be happy to engage on that in a different study or something like that. So it's something possible, but it wouldn't be done within the framework of this particular project. But it's possible to be done. Then a comment from Justin. Financial products for women, which is very critical, women in different categories. Yes, as I mentioned, mapping is important. Mapping is important, even with available data, whether from surveys, whether from data from financial institutions. Mapping is very important to know how do women in different categories use services, and how do they, and what exactly do they perceive as services that better serve their interests. And I think, yes, we can do part of that in the available data, but at the same time, some commissioned studies by financial institutions can be done to better find out how exactly these people need to use different services depending on their needs. And I think, as I mentioned, research is not only restricted to researchers or traditional researchers, but financial institutions need to constantly do research, because you can't serve groups of people you don't understand. I think this is very important to do mapping of the activities done by women, the informal sector women, the women in rural areas, so that products can be done reflecting the needs and realities of these people. And then finally, so in the statistics, someone wanted to see breakdown of the women, different groups. Yes, the data is available, and what I can say right away that is going to be done. So I think if you would like to see the paper, I can give you an updated one where you have those numbers. And then finally, sensitization remains very crucial. That is a response to someone who said Rwanda is a patriarchal society, someone in the corner. Yes, sensitization is very important, very, very important. But it's not only, I mean, it's not a responsibility of one stakeholder, but a combination of different stakeholders to make sure that we address some of these issues. NGOs, development partners, the government, financial institutions. So it's a joint responsibility by different stakeholders. And with that, I would like to thank you so much for all those contributions, and we welcome you to provide any additional comments via the different platforms. Thank you.
Thank you, Doctor. And don't worry, for other questions which you have regarding these disparities between male and female when it comes to accessing financial services, we have now a female presenter, female researcher, who assessed it maybe better than a male researcher. Let us see. Rose Butter? Okay. According to the agenda, we're supposed to break and take tea. Do you really want tea and coffee? Or we are still full? Okay, because it is there. If you want it after, I don't know. Or if someone wants a cup of coffee, you can take it and join us again. Or you want to break for 5 minutes? I don't know. I am really diplomatic. We reflect like in the 5 minutes as we take a cup of coffee and we come. Who wants that break of 5 to 10 minutes? 20%. Who wants us to proceed? And whoever wants a cup of tea, just will go and bring it here. 12%. So others, you want what? Okay. If you feel really tired and you want to refresh your mind, you can go there and take it. Let us proceed. IT Machine presentation. Colleagues who are following online, we will send you, we won't be able to give you the floor to ask questions. Yes. Valerie, I think whoever wants tea, you can help to open the snacks if you want, and you join us again. IT, you can put the 4th presentation.
Good afternoon, everyone. My name is Rosemary Bota, as the moderator already mentioned. I am a researcher. I've also been working on a paper under ARC with a grant from the Bill and Melinda Gates Foundation. I just want to put it out there that this is not a gender study, but it's a study specific for women, because what we're assessing is basically whether the current strides we've made in Rwanda in terms of financial inclusion have actually led to a form of women empowerment. So that's what we are trying to look at. I will also say that our study is going to be a bit different from what you've seen from other presenters, because ours is more of a quasi-experimental assessment. So it's more of giving us new results in terms of what we think is the effect of the of financial inclusion or digital financial inclusion on women empowerment. Maybe I can just use my laptop. Okay, so I just want to mention that this was a study that we did together with my team members. So we have Mr. Tony and as well as Mr. Method, who works with the NISR. So I'll basically take you through the following outline. It's going to be a relatively shorter presentation. We'll start by introducing the study, looking at the main research questions, the methodology that we used in brief, and go into the results, and finally discuss the conclusions and the recommendations. So as a way of introduction, there's been a lot of literature out there on the importance of financial inclusion, and the literature has largely shown that there are benefits associated with financial inclusion to both people in developed areas as well as developing countries. So at macro level, financial inclusion, countries where there's more financial inclusion have been associated with more economic growth. And this is mostly because more financial inclusion makes available the capital base that maybe businesses and other stakeholders or people in the economy can borrow to further their businesses or capital investments. And at micro level, literature has also shown that financial inclusion can reduce poverty, improve food security, and generally household welfare, because it builds resilience. It builds households' resilience to shocks, and also encourages small enterprises. So for instance, if households are able to access loans, or they are able to make savings, they are more likely to be able to invest in small businesses or be resilient to shocks as a result of that. So in the modern times, digital financial services have accelerated a growth in financial inclusion. So like in recent times, that's when we're looking at things like internet banking, mobile money, for instance, which is also a form of financial inclusion. And this has contributed to the increase in the rate of financially included people. So that's what we're seeing in developing countries, to see that mobile money is by far the fastest growing digital financial service that is out there. So as the other presenters also mentioned earlier in the morning, there have been global disparities in terms of financial inclusion, and where that's in terms of the genders, and we've generally seen that 7%, this is data from 2017, we see that there was a gap of about 7% between men and women globally in terms of access to financial accounts. And the gender gap is even much wider when we look at sub-Saharan African countries, where it's about 11%. However, when we look at the Sustainable Development Goals, we see that SDG 5 identifies the achievement of gender equality among men and women, gender equality as well as women empowerment as a key pillar for sustainable development. So we believe that understanding the extent to which women's financial inclusion through these digital financial services contributes to advancing this goal is very important in identifying what we can do to improve, to make improvements as well as to further this agenda, and also to take stock of the progress that has been made so far in terms of women empowerment, so that we could be looking at how much successful we are towards achieving that sustainable development goal. So Rwanda, as has been echoed already, is one of the developing countries that has made really great strides in financial inclusion, and where the data shows that about 93% of the adults are financially included. So this is when we're considering both formal and informal financial inclusion. And mobile money is the most widely accessed financial service in Rwanda. However, when we still compare the uptake among men and women, we see that uptake for women is relatively lower, about 84%, compared to men, where we have it at 90%. So Rwanda presents an interesting case study for the kind of assessment that we want to do, which is to examine the effect of digital financial services on women empowerment, because there's much higher penetration of DFS compared to other countries. And for the purpose of this study, we chose to focus on rural areas, as this is where mobile money penetration, the effect of the penetration of mobile money would be much higher, because it's people who are living in these communities that have relatively fewer options for savings and credit compared to those who are residing in urban areas. So in this study, we are basically trying to evaluate the extent to which women's access to digital financial services, specifically mobile money, influences their ability to access credit. And in addition to that, we are also trying to see the extent to which women's access to mobile money increases their agency. So by agency, what I'm trying to say is, are women able to make decisions about income use or much higher value decisions within the household compared when they have access to this digital financial service, which is mobile money, compared to when they don't have it? So is it a tool that can be used to improve women's agency by boosting their bargaining power when making decisions within the household? So those are the main two key outcome variables that we're focusing on in our study. So for our study, we also did a further disaggregation of this analysis between households, between women who are residing in female-headed households and those who are in male-headed households, because we believe that the dynamics would be a bit different. So we wanted to see whether there's a difference in improvements in access to credit and agency or not. So that's basically the more of a framework of our study. Yeah, so as I've already mentioned, so the main question we're trying to answer is, does women's access to digital financial services through mobile money empower women in Rwanda? And specifically, we're looking at what is the effect of mobile money on women's access to credit, as well as on their agency, which is their decision making within the household on higher value decisions such as participation in the market. So in terms of methodology, our study also uses the 2020 FinScope survey, as the other presenters have also discussed. And this is basically this has a sample of about 12,000 about 12,000 interviews were conducted, and this is data that was collected during September to November of 2019. So we are still, this is the latest FinScope, I believe, data that we have, and we wanted to see what the trends are in the current data. So I won't say much on the methodology because I don't want to bore you with the equations. But basically, that's the kind of econometric model that we're building, where we're trying to see the effect of mobile money on the two outcome variables that I've discussed, which are agency as well as credit. And in this equation, I just also want to mention that we are controlling for all other factors that could be affecting agency or access to credit, so that we net out the effect of those ones and just look at what we're interested in, is which is like females' access to mobile money. And also just wanted to mention that we used an instrumental variable regression approach in this case, because we expect for there to be some reverse causality between the variables we're looking at. So what I'm trying to say here is that, for instance, women who are better off, or who already intrinsically have better agency, are more likely to have mobile money because they're more likely to have the capital requirements to buy a phone and register for an account. But we are trying to look at the opposite to say that, okay, does having that account lead to you having more agency? So the approach that we used, which is with the use of instrumental variables, helps us to be able to take out that effect of reverse causality and really ascertain that the effect that we're seeing is really that effect of mobile money, women's access to mobile money, on agency or credit. So this is just a table on descriptive statistics. I won't spend much time here because I think these numbers basically look the same as what was presented by Kasim and Agnes earlier today. But just to point out that generally we have relatively more males having access to mobile money compared to females. And in terms of phone usage as well, we see a similar trend where the males have relatively, like usage is much higher for males than for women. So we see some of those disparities happening there. And so this is just for our context before we go into the results. Yeah, so to answer the first research question, which was to look at the effect of mobile money usage on women's access to credit. So what we actually find that there is a positive effect in this case, and we find that there is evidence that a woman having mobile money on its own does increase their access to credit for women both in urban as well as rural areas. So we tried to look at the differences that are there as well. So as you can see from the graph, I think the numbers are not very visible, but the first bar is looking at women in, like, the percentage increase, the likelihood that women in rural areas have in accessing credit as a result of mobile money. So we see that it does actually increase that likelihood by about 25%. So women this is for women in male-headed households. So women in male-headed households who are residing in rural areas are 25% more likely to have access to credit when they have mobile money than when they don't have it, right? And we see this, we see something similar as well in urban areas, although it's by a smaller fraction, which is about 22%. So this kind of this result kind of confirms our a priori expectations that the marginal change is, or of the marginal effect of mobile money on credit would be much higher in rural areas compared to urban areas, because we hypothesize that there are other options that are availed to people in urban areas than in rural areas. And we see that this is also what the data is telling us. And then now when we come to look at agency, so women in rural areas, we also find evidence that there is that significant increase in agency coming because of women's access to mobile money. So women in rural areas are experiencing a marginally higher increase in agency, which is by about 8.3%. So I also mentioned that we wanted to look at the difference between women in male-headed households as well as women in female-headed households. And we're seeing that for women in male-headed households, this increase in agency is actually higher, where it's about 8.3%, compared to women in female-headed households, where they increase by about 6.8%. So we see that when we try to assess this for women in urban areas, we really didn't see that effect. There was not much of a difference in agency for those women in urban areas. But for rural areas, we feel like mobile money is therefore a very important tool in improving agency, because we see that it does exist even for women residing in both male-headed households and those in female-headed households. So we also wanted to look at a nationwide picture in terms of agency again. So this is a graph looking at the percentage increase in the effect of mobile money on women's agency for like nationwide, both urban and rural, for between women in male-headed households as well as those in female-headed households. So we see that access to credit, the agency does increase still by about 8.2%, even in the full sample. And so basically our results tell us that having mobile money is a key tool in improving women's agency within the households. So we believe that based on some conversations that we were having, this gives women some sort of financial independence to be able to make decisions on their own, or to save their own little money, or to even borrow money through other smaller scale credit services such as more cash. So it gives them some sort of autonomy to be able to, and that is the form of empowerment that we're being able to see as a result of mobile money. So just to summarize the results that we have, so we've seen that usage of mobile money has a positive and significant effect on agency, especially for women residing in the rural areas of Rwanda, and that mobile money also increases women's access to credit. So we also see that although females residing in female-headed households experience an increase in agency and access to credit, the rate of change for females is residing in male-headed households is much higher compared to those who are in female-headed households. So these are the women who would ideally be disenfranchised, because normally they might have to, for instance, if they need to make certain decisions, they have to run them by their husbands or their partners. So we see that the incremental agency improvement is higher for those women who are in male-headed households. So yeah, that's basically what I've said. So in terms of policy implications, I want to highlight that we are not saying that these are the only solutions that could be, okay, they were only takeaway points that could be taken from this study. I think there are more experienced people in this room, so we could all debate about that. But the approach we took in coining these policy recommendations was for us to look at what can we do to increase the overall usage of digital financial services, either it's through mobile money or other platforms that are more accessible for especially the vulnerable groups, those in rural areas, or like for women, because we know that it comes with benefits. Like we've established in this study that there is incremental, there's an effect in agency for such women who are accessing mobile money. So our recommendations are structured in a way that is trying to look at what else can we do to increase the uptake so that more people can be, the scale at which these benefits are received can be increased. So one of the first one we are recommending is to direct more social payments, like social protection payments, to mobile money. So for instance, this would be the social cash transfer payments that are done. If these could be digitized and directed through mobile money payments, then this could be able to one, register those people who are vulnerable, who might have otherwise not have had access to mobile money to register, and secondly, they could be able to use that resource as a saving in some form or for other purposes to be able to further their welfare within the household. And the other thing was to increase access to mobile phones. This is because we know that you can have mobile money. You can have a mobile money account if you have a phone. So we are suggesting that perhaps mobile money operators could introduce some schemes for mobile phones to have some tax exemptions under certain income brackets, for instance, for the poor, to kind of subsidize them so that we could still increase the uptake of phone usage as well as mobile money, so that people could be able to save through this platform or borrow, so that and benefit from the effects of agency. And the other thing we're also considering is to incentivize savings through mobile money. So we believe that mobile money is a form of financial inclusion, and so it could be used to offer some services with desirable interest rates, so that people could be able to make savings and borrow on interest. I know there are some facilities such as those, but creating them to be more attractive for people to use, or maybe, let's say, increasing the amount of money which can be directed or borrowed through those platforms, would also be a useful way to further the agenda of that SDG 5 goal in improving welfare and reducing the gender inequality. And lastly, this last recommendation is not necessarily related to mobile money, but we think that agency banking is also something that is, it's a tool which is also more accessible to people in rural areas like the mobile money is. And it has also increased financial inclusion to a significant effect, because it does address some of the challenges to the formal financial inclusion, which are like long distances to the formal banks or high costs. So we believe that continual upscale of this form of facility, with special attention to creating inclusive services for women or other vulnerable groups, could also be men, would be a great tool in improving welfare through improved access to credit, savings, as well as agency for those who are participating. Yeah, so that's basically what our study is all about. And that's the end. Welcome any questions or feedback.
Thank you, Rose. Thank you. Take any additional comments or questions? Again, quick comments, if any.
Good evening once again. Thank you very much for the presentation, quite insightful. I have two comments. First of all is still touching back on the value proposition. I think and I believe that there has to be a very deliberate strategy that is purpose-led, specifically on ensuring that women gain access to affordable credit. And this involves all stakeholders from the government, from the private sector, from development banks as well, in order to, because once you do that now, it unlocks a lot of potential from the saving perspective, from ensuring that also the women have access to credit so that they can venture into different types of income generating activities within the rural setting. Because I believe you've all heard of the bottom-up economic model.
which can work tremendously well given the context of Rwanda, and it's working quite well in Kenya. So I think that part of ensuring that there are funds that are deliberately put towards uplifting the livelihoods of women through digital platforms, and specifically the credit facility plays a very pivotal role, because it ticks a lot of boxes. If you're looking at the savings, if you're looking at income generating activities, women empowerment, it ticks quite a lot of the boxes. And then secondly, is in regards to the agency banking. I think more needs to be done by the financial institutions on having also a value proposition to bring more women to be able to lead that agenda of having agency banking in the rural areas, right? So having a value proposition for them and saying that we will give you this available tools, we will invest in you as part of corporate social responsibility, right? Because all the financial institutions do pay focus towards CSR activities. So I think allocating certain funds together with other developmental partners that go towards CSR activities that are specifically targeted on widening the agency banking in the rural areas and giving the women that benefit for them to be able to start these agency banking businesses in the rural areas can be quite beneficial, because when you're looking at mobile financial services, cash in, cash out, and the deposits and the agency banking in the rural areas becomes more and more relevant, because you have to have that cash flow going through, and women can play a very good role in having this type of businesses set up, and the CSR activities that form part and parcel of the financial institutions within Rwanda can play a key role in unlocking that potential. Thank you.
Thank you. Thank you, host, for the good presentation. I just want to know the cause that female living in female-headed household are doing better than those in male-headed household. Thank you.
Thank you very much. I would like to comment on the agents banking. As my fellow colleague mentioned, I will start with the concept of agents banking. There are some of the financial institutions which are looking at agents banking as if they want to make money, like profit, at the inception, whereby you end up finding that either they start charge some of the customers, or they implement unnecessary charges. Let me not call unnecessary charges, but what I want to emphasize that is to call up the fellow financial institutions to focus much on agency banking as a tool of inclusion, rather than itself being a revenue generating. Of course, at the end of the day, when you price well, when you package well your agency banking, you end up getting a return in the future. But at the inception, when you are kicking off the agency banking, let's look at it more as a financial inclusion tool, because it makes it easy for people to access financial services, as my fellow colleague mentioned. Number two is that he mentioned something about the inclusion, using agency banking to empower women. Well, I would like to ask maybe you or him, because when you are onboarding agents, there is no such a thing where you said that men will be more favored, or this particular segment will be favored, because the terms and the conditions are straight. So when we talk about now allocating funds, I would like to seek a clarification, so that when I'm going to defend this to the management who sent me, I say, if I'm saying I want to allocate CSR to empower women on agency banking particularly wouldn't be looked at as if we are now again bringing in segregation, if I may say. That's one. So I would like to seek such kind of clarification, maybe what you wanted to refer on by using that. Lastly, what I want to mention again is on the product that are titled for women. For example, in EcoBank, we have Elevate product, whereby we give women 12.75% who are in business. So what I want to mention now, tightening it to agency banking now is now how financial institution can go further to the level of agency banking so that these women who are in saving groups in those rural areas can still be able to access some of the services. How can we be able to give them micro-lending, of which the services will be granted at the agency level, not necessarily that that particular segment will have to travel miles and miles to go to the branches to have a formal application. So I would say that to me as EcoBank and fellow financial institution players to look into now how can we have those products at the agency level rather than being at the branch level. Thank you very much.
Yes, thank you. I want to ask my question. It would have been asked in the morning, but I think it fits in this session. It is all about disability, even though the inclusion for disabilities has passed off in the morning. So I see when they are saying digital financial inclusion, and they add the word access, but there is some more limits that I can mention. One of them is those forms that we fulfill when we are going to withdraw and deposit money. There are still challenges for persons with disabilities because they cannot fulfill for their own. So I wonder if we are talking about digital financial inclusion. I have heard many people here representing banks. They are aware than me. I am wondering if they cannot change those forms in form of soft. We are used to seeing different Google forms that are fulfilled in form of digital. So is it possible that they can change or give that option of hard copy and soft copy so that to make all people accessible? Thank you.
Okay, thank you very much for the nice feedback. I think most of the sentiments are kind of speaking to the results, and I am happy to see that you agree with, for instance, our recommendation on agency banking. So I think that's very useful feedback on our end. I will let Kasim respond to the question on disabilities because I'm not the expert. But yeah, just going back to your question on agency banking as a tool for empowering women, I think one way where we can start from at the moment would be to look at what are the key challenges that are specifically affecting women, hindering women to have access to agency banking, right? So perhaps it's an issue of maybe they don't have the right documentation. I'm just guessing here. Maybe they don't have the right documentation, or maybe they don't have the right collateral, or maybe their incomes are not at the rate at which we want them to be able to access such services. So I would suggest to first of all, maybe have that as a starting point to look at what are the main barriers, specifically for women or other vulnerable groups, and then maybe we could be able to design tailored services that could respond to those challenges to be able to increase uptake for women. And I agree with you on looking at, especially for agency banking, looking at it as a tool for inclusion and not just profit, because I feel like for us to be able to make great strides in bridging that gap, the gender gap, it's going to really take more than just a profit-looking lens, but to also look at the social benefits that come with it, because that creates much higher multiplier effects to other things other than just looking at it from one angle. I think from the second question, there was a question on females in female-headed households doing better than those in male-headed households. So I think the reason why we thought about disaggregating the analysis initially between women in female-headed households and male-headed households was that we think the dynamics are different. And this is in the extent that women in female-headed households might not have much of the barriers in terms of, let's say, for instance, as the example that was being given, for instance, if a woman needs to access a loan, for example, maybe they need a sign-off by their husband, right? So if this is a female-headed household to begin with, maybe the man is not there to begin with, such women would not have this challenge, right? Compared to those who are residing in male-headed households, these are the ones who we expect to be more disenfranchised than those who are in female-headed households. So we see that the effect is bigger for those women who are in female-headed households because they are starting from a point that is lower already compared to those who are in male-headed households. And so this service creates more, it makes it look like the improvement margin is much higher because they are much lower, they're starting from a much lower starting point compared to those who are in female-headed households, because these are probably making decisions already on their own. Yeah, so we believe it's not that maybe they are doing better, but then it's the thing about their starting points are different, and so the ground in which they are going to cover is going to be different. And we see that the ground is much higher for women in male-headed households because this is where the main challenge is, because the decision-making is already, it has to be that joint effort between both the man and the woman. So I think the others were also comments in terms of borrowing also from what Kenya is doing, in ensuring funds are directed more towards women's credit services. So I think this is really useful feedback. And I think I'll stop there and maybe hand over to Kasim to answer the question on disability.
Yes, thank you, Rose, for the presentation and also for responding to the comments. I would like to throw back the question, pass it on to financial service providers. Unfortunately, we don't have mobile network operators, but I would like to have a financial institution respond to this.
Thank you very much. Actually, I was getting ready to support on any answer you're going to give. There's actually two major policies that maybe I would like to put on the table that are actually being driven by the BNR and actually all the financial institutions across the country. One is on financial consumer protection, and another one is on consumer empowerment. They both speak on actually promoting literacy on the financial services, and as well as pushing the financial institutions to try to cater to everyone they serve. Everyone that will also include people with disabilities, so to make sure that your services can be accessed by them. And it's actually a major push, and most definitely you'll see major changes within this year and next year alone, because that's when most of the milestones actually are set, and there's no actually failure on either of them. So I think it's sort of a comfort I would like to put on the table, and but I will admit there's still a lot to do, but this is actually a big step forward towards actually the ideal financial inclusion that we are hoping for. Thank you very much.
Very quickly on the part of the CSR comment that I made,
Now, for example, we have like some multinational institutions, for example, like the Dutch Entrepreneurial Bank, whereby when it comes to CSR, as part of a good practice, is that there's a deliberate strategy of ensuring that at least 20 to 30% of the CSR is targeted specifically for women. Because when you put a strategy of a blanket approach towards it, then the women will more often than not get easily forgotten, all right? Because you'll have the men-led enterprises within the rural areas that are doing far much better. When you're doing the analysis, you see that yes, they are eligible to become agents of the financial institutions, because there's usually a checklist that the financial institutions have on ensuring that these and these particular establishments are able to become or provide the agency banking services. So as part of that corporate social responsibility, as the name suggests, then there has to be a deliberate strategy in place and a percentage allocation within the CSR that goes toward these women-led enterprises, right, within the rural areas, in order to uplift them from one level to another. Because you can have some of these micro, small, and medium-sized enterprises, even within the context of Rwanda, that get locked out on becoming agents, all right? Probably they haven't reached the size of the business that is required for the financial institutions. So as part of that CSR allocation, when you target these women-led enterprises and apportion a certain percentage towards it, then it's deliberate, it's well thought out of, and what that does now is that it brings more and more of these women-led enterprises into the bracket of institutions and SMEs that can be able to access much larger funds, even from the financial institutions that are providing the CSR activities. I believe even when you're looking at the analysis that the financial institutions use, when you're looking probably at the NPL rates, when you're comparing women-led enterprises and also these other enterprises, you can see that more or less there's a difference in it, right? So ensuring that looking at the bank's portfolio, these are the women-led enterprises that we have, so let us apportion a certain percentage that goes towards a CSR, which in turn trickles down to ensuring that they're able now to become agents of the bank within the rural areas, thereby leading to more and more of the women empowerment in the rural areas. Thank you.
Yes, thank you very much. I will just give one wrap-up on that, on the question of disability. Thank you so much for the contribution. But also I wanted to say that, so he just to give you a direct answer, is it possible, he said it is it possible to make some of the forms to move from hard copies to soft copies? And I think he gave the response. I think the response means the answer is yes, it's possible, but it has to be a gradual process. And I think from his answer he's saying that some interventions have been done, some are being done, and of course a lot has to be done. And when I was interacting with some financial institutions, they said sometimes they want to do some inclusion, for example, what he's suggesting, but they need to have step-by-step guidance and benchmarking, which they requested the regulators, like the central bank, to be able to guide. So they are willing, but they need to be guided technically on how to make the move, including the one he's suggesting. Thank you so much.
Thank you. Any other question? Okay, thank you very much. Let us thank Rose for the paper and the colleagues they worked on. I will by clapping for her. Thank you very much, Rose Bota. We will share with you the papers, as we said. When you registered, you mentioned you indicated your emails, so we're going to send the full papers. Again, somebody we are saying, can we still provide inputs, or their final papers? They are yet to be published, which means the comments which we were collected today, or any other comment which you can have even after, like in a week period from now, they can be considered. So allow me to call upon Kasim to try to summarize key recommendations for today, and after that we will close our session. Thank you.
Thank you very much, Seth. And once again, I first take this opportunity to thank everyone who has sacrificed their time to really be part of this. So this is a very important exercise for us, because evidence becomes useless if it's not taken up or understood by those who are supposed to know what it exactly means. So thanks a lot. Just to give you a wrap-up of some of the recommendations, I will not list all of them, but I will just pick the ones that encompass the whole lot of issues that can be done by all stakeholders. We have seen the need to have mainstreaming of policies, whether to mainstream for disability or gender inclusion. There is need to mainstream some of the existing policies, to have some specific interventions that are meant to promote financial inclusion for different categories of people, without mentioning whether youth, women, persons with disabilities, or others. So within the, for example, the financial education program or strategy, we need to have some specific interventions that are directed to different types of people or categories of people or groups to build the skills base which is needed to access and use financial services effectively. And of course, that is something that is within the national plans. As I mentioned, there is a target of digital literacy within the national strategy for transformation, and perhaps what will be done within the sector strategic plans, the annual plans of the different institutions, is to make sure that specific interventions are put in place to have the skills programs or skilling programs for different types of people in their respective contexts. And then the other issue would be to strengthen the implementation of some of the existing policies and regulations. And here are some of the examples given. We have interoperability. For example, the newly established Rwanda National Digital Payment System. How can it be strengthened, or how can financial institutions be encouraged to join? That's one. Then we have cybersecurity, which is a threat, cyber insecurity, which is a threat to some people shying away from digital financial services. So strengthening that would, of course, encourage people to use digital financial services. And then there's another one which I mentioned in my first presentation on disability, enforcing the building code. That's also an aspect of implementing policies and strengthening the regulations that are in place. And we also have, I think I've mainly picked this from here, from the combination of the different recommendations that have been made. It has been very clear that there is need for more communication, collaboration, and partnerships among different categories of stakeholders, from government, from the financial sector, and also from the organizations representing different types of different categories of people, to understand what exactly would be the definition of good service delivery for women, youth, persons with disabilities, people in rural areas. So that communication is definitely needed. And then the other recommendation would be still also in line with partnerships, to have public-private partnerships, especially when it comes to investments that are costly. For example, telecom infrastructure in rural areas to improve service delivery for the rural areas, especially when it comes to digital financial services like mobile money, mobile banking, internet banking. So having reliable services requires massive investment in infrastructure, which needs to be the responsibility of all stakeholders. And one way to do that is to have some public-private partnerships. And we also have, we have seen
the aspect of mobile money, promoting agency, or which is the decision making among women, I mean for women within households, and some of the recommendations to improve the way mobile money serves women is to have, for example, within, so it's always important to work within existing frameworks, and my colleague, the previous presenters recommended having, for example, more VUP funding or funds, social protection fund, to be channeled through mobile money so that more women, even in rural areas, can access such mobile money transactions. And of course, that would be the first step to using digital financial services in general. And then incentivizing savings through mobile money, of course, for rural women, as she presented, is also one of the issues to be worked on. It's a multi-stakeholder effort to achieve that. And then agency banking has been mentioned in her presentation and also in the previous presentations. So how can agency banking be scaled up to ease the issue or the cost of physical access for rural women, persons with disabilities, and other types of, or other groups of people who would like to use financial services, but they are restricted in terms of physical access to the premises of the different financial institutions. And I think finally, awareness. How can awareness be raised? And here I mentioned that this is a joint effort, needs joint effort by financial institutions, by government institutions, but also organizations representing different categories of people, and that is the civil society. And I think what I can give as the final one would be financial institutions using a customer-centric approach to understand the needs of the different categories of people, so that products are designed to suit the realities of those different groups. Otherwise, with that, I think I can say there are so many other possible suggestions. Some of them are from the government, from the financial institutions, civil society, but these are some of the highlights we made, and I can say the list is not exhaustive. I'm not saying these are the ones that have the magic. There could be so many others. Even you can actually suggest some which have not been included, because what we are trying to see is to have, to address as many constraints as possible to further development of an inclusive financial sector and digital financial services. Thank you so much.
Thank you very much, Kasim. This brings us to close this session, and I also thank you for being with us since the morning. We have another policy dialogue on Tuesday next week. It will be around monetary policy. We are organizing it with the central bank. We will invite you. If you have time, also come. I think policy dialogue is very, very important. First, to inform ourselves. Secondly, to give recommendations to inform policy making, and also to inform other actors in the development of the country. So thank you very much for coming, for making the time. You have been here with us this morning. And as we promised, we're going to send you the PowerPoint and the full papers. And also, we invite you to visit our website, EPRN website, IRC websites, because you have frequently, periodically, research papers. If you want to be informed, it's good you read the research, you do research. Research is always, even when you go to buffet, when you are trying to see if you put rice or whatever, you are already doing research. Research is everywhere. So please join us, the Word of Researchers, eprndelguanda.org. There are services, we have trainings, we have research, we have policy dialogues, like the one I'm inviting you on Tuesday next week to be in the same hotel. We're going to send you the invitations. So thank you very much, and have a good evening. Thank you. By the way, for those ones who want transport refund, there is a lady over there on the table. If you think you want transport refund, you can pass by. There is a small refund for your transport. Thank you very much.